This is Sherry. I'm your host for today's Traders Exclusive webinar, How to Become a Disciplined Master Trader. And we'd like to point you to our website, tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. And this is also where you're going to find a recording of today's webinar. I will also send a link. You'll get emails from your speakers, and you'll be able to come back to it as needed. Before we get started, I'd like to share a quick disclaimer. I'm going to show my slides in just a second. I'm only on one screen today, so I'm going to be jumbling things around, so please bear with me. Let's see, can I do it? So you're just going to see my PowerPoint, I think, because that's going to be the safest way for me to do this. Can you see my screen yet? Anybody? Awesome. Okay, there we go. Sorry for all the stuff on the side there. It's kind of a unique kind of day today. But the disclaimer I wanted to tell you about is you should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. First off, for today, please take your notes and write your questions down, and try to hold your questions until after the presenter is finished, because then that way they'll be able to present to you the exact vision of what they are bringing for us today. It's all educational. And I'd like to introduce to you right now Adrienne Toghraie. She's with the Trading on Target, and she's bringing Evolution of a Master Trader to us. And she's a trader success coach. She's an internationally recognized authority in the field of human development for the financial community. Her 13 books on the psychology of trading include The Winning Edge, Series 1 through 4, and Trader's Secrets. They've all been highly praised by financial magazines. Adrienne's public seminars and private coaching have achieved a wide level of recognition and popularity, as well as her television appearances and keynote addresses at major industry conferences. Let me just see if I can bring Adrienne up for you and hand her make her your presenter. All right, let's see. And I apologize, folks. It's not usually this, I'm not usually this disjointed here today, but it's been an unusual day for internet. So I'm going to make Adrienne your presenter. Adrienne, are you with us, and can you take it away?
I'm with you, but you haven't given me the ability to put up my screen yet.
You should have it now.
Ah, there we go.
Thank you. Sorry about that. As I said, today is kind of unusual for me. I'm battling the internet gremlins.
Okay, can you see it now?
Yes, Evolution of a Master Trader. Take it away. And thank you for joining us.
Thank you, traders, for being here. In my years as a trader's coach, I've seen and identified the path of the evolution of a trader from novice to mastery. I've created a model by putting traders into categories. This does not mean, however, that a trader has to experience every one of these categories in order to be a profitable trader. If a trader knows and chooses to make the right choices from the start, he can be like the few traders I have known that have made money from the start. But it has been my experience that most traders won't. So I've put together these 5 categories of traders in order for you to identify where you are and what you have to do to get to your next level of success. The first category is what I call the intuition trader. This is an individual who comes into trading but doesn't treat it like a business. Perhaps he has read 1 or 2 books on the subject, such as Trading for Dummies, and maybe his education makes him think he can be a top trader because he's intellectually advanced. But the fact is that trading is a separate business from other businesses. So rather than doing the hard work required to get up to speed in this new field, he's intuiting that he will succeed. The second type of intuition trader is the mechanical trader who refuses to give up the fact that his system he took over 2 years to put together doesn't work in this current market conditions. The third type is the floor trader, who comes from the place of knowing what to do on the floor, but doesn't know how to change to computer conditions. The fourth type is the trader who has been a buy 'em and hold 'em person of the past and thinks that the same rules apply in current markets. While there are traders who do earn profits as investment traders, as I call them, the rules of the past don't always apply. In order to be successful, the intuition trader has to get into another category, because if he stays in this category, he will lose money and he'll find that trading is not a viable way to earn a living. So, why are they stuck in this category? Well, they don't know any better. They've isolated themselves. Well, obviously, none of you are in that, or else you wouldn't be coming to this webinar. They are too stubborn to make changes in their system or themselves because it costs time, money, and they might have to face their demons. Or they think that because they've received a high education in another field, this automatically entitles them to earning money as a trader with no education. Or they don't have the resources. Now, I'm going to be talking about resources several times, so you'll know what I mean. The intelligence. You have to have emotional intelligence. You have to have what it takes to be able to put a strategy together. You have to have money, and I call this inventory for your business, because if you think of it as money, then you think of it as attached, an energy that it is attached to maybe your retirement fund, your children's education, your savings account, and then it's attached to an emotion. So if it's inventory for your business, it's something that you need in order to make money. You have to have the education, the kind of education that you need to buy and sell, and the kind of education that is necessary for you to follow your rules. You have to have the time. What I mean by time is you need to have energy time. You know, if you're working a full-time job and then you come into this when you're exhausted, you're going to bring your emotions into this. So you have to have the kind of time to spend on this in order to get to a point where you know what you're doing. You have to have the support. You know, if people in your life are saying you're a gambler, that's not the kind of support that you need. And if you let others influence you in the wrong direction, then of course it's going to take a lot longer for you to be successful. It's important that you get the kind of information that you need, but make sure it's the right kind of information. So what do you need to do to get out of this situation? Decide if trading is really for you. Is it a passion? I mean, do you get up in the morning and say, hot damn, I can't wait to get to the computer? Or is it, oh my God, I have to face that computer again? You have to have the commitment. And that's the commitment to get through hard times. I mean, you can go along smoothly for a while and then have a big drawdown. Now, do you have what it takes to face that drawdown, do what's necessary to overcome the loss that you feel within yourself? You have to gather the resources, and I talked about resources before: the intelligence, money, the education, the time, and support. You have to develop a plan and follow it. Now, that plan is includes a strategy, a methodology, a criteria for entering and exiting a trade. Now, I have found stories motivate traders to realize that no matter what their situation, where there is passion, there is a way. The story I'm about to tell you is a true story about a truck driver named Carl who dropped out of school in the 7th grade because he didn't have a choice. His father died and his mother couldn't hold a job because she was dying of cancer. Carl had to support his mother and his younger sister. He first ran a tractor and did odd and end jobs on a farm. When he was old enough, he took to the roads as a truck driver. As a truck driver, he had a lot of time to listen to talk show radio. One day, there was a motivational speaker who asked, "How do you define yourself?" He answered out loud to himself, "Well, I'm just a high school dropout who'll never be more than just a truck driver." The announcer gave him just enough time to answer before he asked, "What would you like that answer to be?" Carl thought for a quick second and said, "I want to be smart, wealthy, and handsome." Then he was asked, "What can you do to start right now to make what you want happen?" Carl started using the time in his truck to study for his high school equivalent and continued to listen to how-to books for the next several years. One evening at a hotel stop, he heard an infomercial asking, "Do you want to be rich beyond your dreams?" and continued to give advice about how to become a trader. Carl immediately said yes, bought the course, and scheduled himself to trade a few hours a day from his laptop. He hit a wall of doubting himself, his ability, and whether he was stretching too far when he lost over $50,000. Fortunately, Carl decided to go to a trading conference and choose the right person to mentor him in becoming a trader. He had many pitfalls along the way. I met Carl at a conference he attended in Las Vegas. Now Carl is a successful trader. It takes passion. It motivates you to do the hard things to become a trader. And if you have it, then you can overcome being that into-wishing trader. The next trader is what I call the GimMe Trader. These are traders who want the answers from others. Maybe they get the answers from chat rooms, align themselves with another trader, who gives them the direction they need to buy a system, or they don't test the system after they buy it. But ultimately, they're not responsible for their own decisions, but base them on the advice of others. The second set of traders is in this category, gives their money to others, such as brokers or money managers who can make money for them. However, most brokers are not traders. So do due diligence before you hire a broker and research the brokerage firm's compliance record as well as the compliance record of the individual broker. Excuse me. You want to know where your hard-earned money is going. I do recommend that you have 2 accounts, however, one where you're paying the lowest commission, another where you have the advantages of a full-service broker. Many brokers have access to information that will make it worthwhile for you to maintain full brokerage services. And with some brokerage firms, you can have access to both services. There are 2 types of money managers. Unregulated money managers are traders who can only trade a certain amount of money and usually only for their friends and family. These money managers present you with a big risk because you can't check their background. Just because they have a lot of money doesn't mean that they can make money for you. They might be enjoying a luxurious lifestyle simply because others gave them money to manage and not because they have the ability to make money for their clients. On the other hand, it's easy to check the track record of regulated money managers because they are required by the SEC and other regulatory agencies to present you with their track record. Of course, in Madoff's case, what he was doing was creating false statements. He was messing with the books. The problem with giving your money to a money manager is that some of the best regulated money managers will require $250,000 from individual clients. Now, most traders don't have that kind of money, and if you do, you're taking a big risk by giving it all to just one individual. I'd say that the best money managers return between 4 to 6% at this point in the calendar. If you're looking at those money managers who produce a higher return, you're also looking at money managers who usually are not risk adverse and perhaps in the long run are not able to keep up with that kind of momentum. The question is, do you have the ability to manage your money managers? Do you trust yourself enough to choose the right one for you to do their job? So why are you stuck in the position of the GimMe Trader? You don't have the confidence in yourself or your strategy. You want others to take the responsibility. In other words, others to take the action, so you don't have to be responsible for being wrong. You don't have the time or energy, or as I was saying before, energy time, which is important because the time you spend in trading should be highly energized. Or you're afraid to leave the security of your job, the security of a paycheck. You know, if you've grown up with parents that always brought in a paycheck and paid the bills, it's hard for you to learn to be an entrepreneur and be on your own. So what do you have to do to get out of it? Build your self-worth, your self-values, your self-confidence. Build the resources I talked to you about before. The next category, and I would venture to guess that most of you are in this category, is what I call the struggling trader. This category can include a wide range of traders because a trader in this category can make no money or he can make millions. What's true for all of these traders is that they are inconsistent, and inconsistency can be on a daily basis, quarterly basis, yearly basis. The fact is that they're not consistently bringing in the return that their system or methodology will allow. Traders in this category are missing part of the equation that makes them traders who are able to receive the total benefits from their system. Now, there's a wide range within the three types of struggling traders. The first can range from someone who is not making money to someone who is breaking even to someone who is making and losing money. These traders haven't necessarily received the type of education necessary to feel confident about their ability or their methodology. These are traders who perhaps didn't put together a business plan that includes their system or methodology and contingencies of everything that could go wrong or right with the best possible outcomes to keep them in the game and make them accountable to themselves. Or they haven't kept a daily journal to identify where their inconsistencies are in following their rules, or they haven't done periodic reviews to improve on their system. These are traders just beginning to realize that discipline is the key to making profits. And at this point, they're not willing to invest in more than a book about discipline issues, or they haven't back or forward tested their system so they can feel confident that their system has the probability of being successful. Until they have taken all of these steps necessary to get to the next category, they will remain inconsistent. Just about 25 years ago, when I first got into this, there was very little education available for a trader. So the trader either learned to fail his way to success or sought out the few traders who were willing to mentor them. In this day and age, there are almost too many so-called trading schools that are willing to teach you what they believe to be what you need to be successful. It is important that you do your due diligence in seeking out what's right for you. If you have the resources, I recommend a school that gives you an overall education before you specialize. If you're working with limited funds, then read books about traders so you can figure out whom you identify with and then get an education specific to that type of trading. The second type of, excuse me, let me drink some tea. Hold on. Excuse me. The second type of struggling trader is someone who has given himself a good education, has a business plan, but only brings in enough money to supplement his income, or is always struggling to feel confident that he will last another day in trading. These traders haven't taken the time to handle their psychological issues that keep them from being a top trader. And sometimes they don't see the need for it or make fun of it. The third type of struggling trader is someone who is making a comfortable living or even a great deal of money from trading, but knows that if he was consistent, he would be earning a lot more. Perhaps he has even looked into the psychology of trading and taken a seminar, has done private work, and has improved his results, but knows that he still has more to work on to be as successful as the system would allow. The story I'm about to tell you is a true story about a fellow that I worked with many years ago, who was working for a company of gas traders. And he came up to me and he says, "I want you to be my secret weapon." He didn't want anybody to know that he was working with me in the company. Well, we worked together. That year he had brought in $10 million, which 20% was his in commissions. And he says, "I want to trade like the big traders do. And I want to get rid of all the stuff that keeps me from it." Well, the next year he made $32 million and calls me up again. And he says, "Well," he says, "I know I still can make more money and I want to work with you again." So we worked another 2 days, and the next year he brought in over 50 million, calls me again. This went on for several years until the last year he called me and he says, I made 118 million this year. I guess I'm trading like the big boys do." So you would hardly think that someone like him is a struggling trader, but he was struggling to be the best he could be within the strategy system he had and within the psychology he had. So you're in a good category if you are a struggling trader. So why are they stuck in this category, the struggling trader? They're not consistent. And that there was a fellow I worked with a long time ago for the New York Mercantile Exchange, and he came to me and he says, every August, September, I lose a lot of money. It happens every year. So after I got to know him and work with him, what we found out was that he was taking his vacation just before that, but he wasn't taking the kind of vacation that he needed, like fishing and yacht kayaking. He was taking his wife's vacation, was more like cruising and going to Europe and that sort of thing. And I told him he had to take his own vacation. Of course, he had to take his wife's vacation too, or else that would have caused another problem. But there was a part of him that was telling them that he needed that relaxation that he got from vacationing. Number two, they need to overcome self-sabotage. Self-sabotage is usually identified with fear of success, fear of failure, fear of being wrong, or having a limiting belief. A belief is what's true for you. So if what's true for you is that you're not worthy of achieving success, or you'll never be a competent trader, or you're a gambler, then you're not going to succeed. Those beliefs have to be turned around, transformed, so that you can work with them towards success. Or they have a conflict. The conflict is when you have two beliefs that are fighting one another. Part of you says go, part of you says no, part of you says get into the trade, part of you says get out of the trade, and you've got those kind of things going. So what do you have to do to get out of this category? You have to build your technical skills. You have to raise your ability for taking risk. And you do raise your ability for taking risk by taking a certain amount of risk, and then when you see that you're making money, then what you do is you sim trade on a higher level of risk, and if that's working for you, then you take a higher level of risk until you can get to a point of taking that the kind of risk that your strategy will allow. Build on your inventory. You have to have money to make money. Get the environmental support you need. Make sure that the people in your life support you. Build your self-values, your self-esteem, your self-confidence. Release repressed emotion. If you have a situation that you make money, and lose it, make money, and lose it, then what you have is what's known as repressed emotion. In other words, you haven't handled the emotions of a part of your life where you have felt a loss or overcome self-sabotage. The next trader is what I call the average good trader. This is a trader who is consistent about making money and who follows his rules. This type of trader also has a wide range of return, depending upon how much trading capital he has to work with, what level of return his particular system will yield, how much he's willing to risk, and if he is willing to do whatever is necessary to develop his psychology for it to bring out the best in him. While traders might not have an issue of being consistent, they still might have an issue that stands between them and their next level of success. The average good trader will have a solid, successful, long-term career as a trader, and all beginning traders would be fortunate to reach this level of trading. So, how do they reach this level of success? They have completed everything a trader needs to do to gather the resources and have a solid support system. So what does a trader need to do to become a master trader? They have enough resources to support that next level. They have the will, the psychology, and the know-how to add what I call the intuitive filter. So now we get to the fifth level, the fifth category, the master trader, the intuitive trader. He is a trader who has done everything necessary to be a top trader and then goes one step beyond mechanical indicators by adding a filter known as intuition. Now, there are many excellent trading systems out there, Gann, Elliott Wave, Ross Hook, just to name a few. There are many traders who teach these type of systems. Unfortunately, there are also many traders who discovered these systems don't work for them. Traders who teach these systems don't always have the ability to teach the intuitive part because most people have to learn that on their own. And while many of you have had the experience of knowing where a trade will go, a knowingness that is beyond your mechanical indicators, most people can't quantify that filter or identify it as something they can rely on. An intuitive trader can. These intuitive master traders know how to work with their right and left brains synergistically to balance their logical and creative side. Reliable intuitive trading is something that I have taught many of my clients with great success. It's not something that traders should try to do on their own without handling their psychological issues first. However, many traders attempt to do this and find that it is disastrous for their bank accounts. But those traders who do take the steps necessary to fully train themselves as traders and handle all of their psychological issues can become intuitive master traders. At this point, they're ready to reap the top rewards of their profession. How do they reach this level? They have a system or method that they believe in because it was tested. They follow their business plan and set of rules. They have overcome their psychological issues. They have developed a reliable intuitive indicator. So what do they have to do to maintain this level of competency? They have to maintain physical, emotional, and mental health. They have to maintain psychological balance. They have to stretch the optimal level of risk. And they have to monitor and improve their intuitive skills. Remember Carl, the truck driver turned trader? I would say that he was one of my best clients because he came the longest way and made it very big on his own. Sometimes the person needs one boost, one motivational kick, someone who believes in them or all of the above. But first you need to allow yourself to hear the answers to what you're looking for. Then you need to take action and make a plan and follow through on that plan. You need to allow for the bumps in the road. And you need to support your neurology along the way by taking care to improve your psychology. Carl, the truck driver, is now a multimillionaire as a result of trading, has earned a degree in finance. He's now passed his master's degree and is happily married man with 3 children. The only thing that he didn't get from his initial wish is that he's still not handsome, but I don't think Carl would believe you if you told him that. Well, I look forward to meeting you on your path to becoming a master trader. Please go to my website to see what we have to offer. It's called tradingontarget.com for more information. And we'd love to support you on your journey to becoming a master trader. Now it's time for you to send me questions. And while you're thinking about questions you might like to ask, I'm going to make you an offer. This is my course, the Trading on Target Home Study course. Online, it's normally $600. For the people who listen to this particular webinar and write me an email with your phone number and the best time to call you, I will give you an incredible discount. This is only available to the people who are listening right now to this particular webinar. The people who listen thereafter, I will give a discount to, but not quite as dramatic, because I sell this every day for 600 bucks. In fact, I will tell you what the discount is. The discount will be 25% off, but you have to let me know today, or else the discount falls to 10%. I have a top performance seminar. I now do it online privately because of the COVID thing. And this is how to get in touch with me. You write to me at adtoghraie@gmail.com, and you send me your phone number and the best time to reach you. And you can tell me whether or not that you want the course or not. Okay, let's see if I have any questions. Okay, I don't see the questions here. So are there any questions out there? And if they're not, then what I do have is I have a fishbowl, and I can ask myself questions and answer them at the same time.
Yeah, I'm just waiting on some questions to come in right now. If anybody, okay, so I have one from Bahai or Baal. Please forgive me if I mispronounce your name. Can you talk a bit more about intuitive aspect of trading?
The intuitive, I have a 3-day seminar that discusses it, but I'll try to put it in a nutshell. Intuitive trading usually comes as a result of trading for a while, because you need to become at one with the markets. And the way you become at one with the markets is by trading every day, by getting a feel for the markets, by getting the highs and the lows and the in-betweens. There was a very famous trader by the name of Ed Seykota. He used to put charts on the wall, and he would go from day to day and look at those charts, whether it was, in stocks or commodities, and he would look at each chart, and he would decide, okay, where is it going to go the next day, and where is it going to go the next day, or he'd have charts where it's going to go the next hour, the next hour, the next hour. And I met him a long time ago when we did a seminar in Hawaii together, and he was standing in his Zoris and shorts, and he says, I got to go make a cotton trade. And I said, well, how do you know to do that? And he says, I feel it. And he was not looking at a chart. He wasn't looking at a computer, but trading became part of what he was. I want you to think about anything in your life where, you walk into the kitchen and you're looking at your wife standing there, and you know that she's upset about something, or you know she's happy about something, and you're not even looking at the front of her, you're looking at the back of her. Or a phone call comes in, and you know who it is before you even go to receive that call. I once had a friend of mine call me 4 years after I saw her, and I knew it was her on the phone. And these things happen all the time. We discount them all the time, but we can create that intuitive part by back testing, forward testing, sim trading on not only what you're normally trading, but sim trading on other probabilities. You have to get this sense of the market. And but the other thing that you have to do is the thing that will keep you from having these intuitive abilities is your emotions. So if you haven't handled the psychological issues that you've had in your life, you're going to have a problem with your intuitive self. You won't be able to trust it. And that's the encapsulated version that I could give you on intuition right now. Next question, if there is any.
I do. I have a couple. Let's see. Brian Davies, Brian, what's the biggest challenge most traders have?
The first biggest challenge most traders have is they don't know if it's a real profession. They don't know if they can make money in it. They don't know if it's all rigged. Well, I'm here to tell you, yes, it is a profession. Yes, there's only 11% of the people that get into this business that actually make money on a consistent basis. But if you do the right things, you'll be in that 11% category. But see, most people, they'll take advice from their barber, they'll take advice from a friend, and they'll read one book about trading and they'll consider themselves a trader. When you consider the fact that, people that become doctors, lawyers, engineers, they go to school for many years. They pay hundreds of thousands of dollars sometimes. And people come to this business with their $2,000 and they think they're going to make millions without the kind of education, without the kind of financial contribution to their business, that they'll make money. It takes money to make money. It takes an education to be good at something. It takes the consistency. It takes the motivation. It takes the passion in order to make it work. The second thing is they don't have a system or methodology, a criteria that they believe in, a criteria that you can enter and exit a trade at the right time with the right kind of risk to actually make a profit. You're dealing with these big machines that have all the systems. They know where the stops are. And, you wonder how the heck can anybody make money when you're competing with that? Well, I can tell you that my clients do. And they do because the one thing that a computer doesn't have is the human brain. But you have to go beyond that system, beyond that methodology. You have to stick to your rules until you can find yourself within the system that can make the money. A very famous trader wrote 52 books on trading, so that'll give you a hint. He once told me that the people that he's worked with that make the most amount of trading are the ones who have taken his trading methodology and tweaked it to their own self. And that's what made them successful. And then when you go beyond that, and you have to believe that you can go beyond that, that's another thing, you have to have that belief that you can be an intuitive trader and make more than the 25% a year that the average trader in that 11% makes. When you go beyond that to that 1% of that 11%, then trading becomes an art form. It's no longer a science. And that's another thing that people need to discover about trading, that it is an art form. Next question.
We've got one here. What is the source of self-sabotage? And would it be the same source as inner conflict, repressed emotions, and limiting beliefs?
You named a bunch of sabotage traps, and these are the sabotage traps that I talked about. Sabotage has everything to do with you working against yourself because of some inner struggle that you have that doesn't allow you to follow rules. That's basically it. And it usually has to do with emotions, fear, anger, mistrust, frustration. Well, I'm looking at the time and I'm almost up, so I only have a couple more questions that I can answer.
All right. Well, I've got a couple more for you. Matthews wants to know if you coach coaches.
If I coach, I have coached a couple of coaches. Coaches meaning people who are who want to be neurolinguistic programs style coaches. I have done it in the past. I don't do it now. I'm at a point in my career where, you know, before I was working, you know, 16 hours a day, 7 days a week, and now I'm working maybe 4 hours a day, and I still enjoy working with people, and I limit myself to only a few of my clients and a few people that I want to take on. No, I don't coach in the sense of on a regular basis. I will work with people who want to be traders, and as a result of wanting to be traders, they go on to be coaches. But I haven't done that for a while.
Okay, so we've got about 3 minutes left, but there was a couple more here that were really good questions. And one was, what are some techniques to alter your limiting beliefs? And the other one, I think they're kind of related, is suggestions on the best way for traders to ideally allocate their time. I mean, you would definitely need techniques to alter your beliefs, but one of the ways to do it is by being successful at what you're trying to do. So you need to allocate your time really well.
Okay, first of all, I'll deal with time. All the traders that I've worked with, I always tell them, do not work with trading more than 2 hours a day. In other words, trading itself. Yes, you could read, you could study, you could do those kind of things, but otherwise you're going to burn yourself out. It's too concentrated a business to do more than 2 hours a day. How you overcome self-sabotage issues, go back in your life to every experience you can think of that was a negative experience, and in your mind have a fantasy about it that changes the way you look at it, changes the fantasy to a positive outcome. I'm giving you that in a nutshell right now, but remember, these are conscious kind of answers. The kind of things that make the real difference is when you work with the subconscious, and working with the subconscious, you have to work with a coach. So I'm just going to go back. Oops. I guess I can't go back. To the home study course, and tell you if you're interested in purchasing it within today, only today, write to me at adtoghraie@gmail.com, and I will give you a 25% discount. Yeah, I'm not going to give you any kind of sales pitch. If you want to ask questions, you can ask questions. But if you're listening to this and it's beyond today, then you'll get a 10% discount if you mention this particular group of seminars. Thank you so much for having me. I really appreciate your being here, all of you that have joined, the 120 people that are in this room. Thank you for coming from all over the world. I hope to see you in your journey, and I hope to be part of your success.
We really appreciate you being with us, and everybody can see that there. I also posted in the chat to email you at your Gmail, and I just want to remind everybody, there's the home study course. So thank you so much, Adrienne. That was really great. We appreciate it, and we hope to see you again soon.
Thank you. Bye-bye.
Bye-bye now. And our next, let's just see, I'm going to become the presenter again. And I'm going to, there we go. All right, guys, I want to let you know that if you have to leave early, you can go, because we're going to have a recording available. You go to tradersexclusive.com/archived_, which you can't see because of the underline, webinars, and then / again. It'll take you straight to the page where you can see this webinar and every webinar before that. Usually we have the replay up by tonight or in the morning. And I'm really happy to bring in now Alla Peters. She is with Fibonacci Trading Institute, and she's bringing us a presentation called How to Trade Like a Hedge Fund Trader. And Alla is the founder of the proprietary Alpha Fibonacci method, Alpha Fibonacci software, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel, and Fibonacci Trading Institute since 2011. And the proprietary indicator free Fibonacci method Alla has developed in 2008 is traded on Wall Street by top financial institutions and is globally known for its ultimate precision and simplicity. So she's consistently develops new proprietary strategies, software. She continues teaching in live online classes and presents at major hedge fund events. Alla's very passionate about what she does, and she's mentored thousands of traders from beginner to hedge fund trader in 57 countries. You can listen and view students' performance at FibonacciTradingInstitute.com. Alla, thank you for being with us. I'm going to turn it over to you now. And I believe we can hear you.
Marvelous. Fantastic. Thank you so much. And if you could please allow me to post the link in the room, I will appreciate it. And we will start.
You'll send me a link. I will post it. I'm not sure how to give you that.
Okay, I just send it to you. Let me give you other links and we will start, traders.
All right. Send it to me.
So thank you everyone for being here. I just had an incredible morning with my incredible students in United States, in Florida, in California, in New York, as well as Middle East, Europe. Let's start. Are you ready? Hello, traders. In this webinar, I will present how to trade like a hedge fund trader with Alpha Fibonacci system. But first, I would like to remind you, Fibonacci Trading Institute or my incredible team not registered with U.S. Securities and Exchange Commissions or any other financial regulatory authority. It is essential to recognize that everything you see in this webinar is to empower you and educate you how to manage your own hedge fund, how to think and trade as hedge fund trader does. Nothing here constitutes as recommendation to buy or sell any instrument. Past performance not indicative of future results. All software demonstrated as is, and I hope you understand risks involved in trading any instruments. All testimonials from my incredible students in 57 countries cannot guarantee anyone else's performance. Their performance is a very high bar that even beginner trader can accomplish. So, no guarantees, but power of your mind, power of your effort with Fibonacci system. You will see next. In this webinar, we will be covering key steps how to trade as a hedge fund trader. You will see multiple examples from day trading to long-term future stocks and forex in current and prior markets. You will see how traders trade globally the system, and most importantly, how you can trade as a hedge fund trader with Alpha Fibonacci system on any instrument, any account, any platform. Briefly about myself. I came to this incredible country of United States of America 30 years ago with nothing. Within a couple of years, I managed a clinic in Johns Hopkins Hospital. Within 8 years, I became a multimillionaire. I bought real estate, I invested in stock market, I founded multiple businesses. I became fascinated with stock market. 2004, I was introduced to Fibonacci. 2008 market crash, I developed first strategy. 2011, I found Fibonacci Trading Institute, and ever since, I've been mentoring traders all over the world. How to trade profitably, how to think and operate as top 1% does. You can see multiple testimonials, multiple emails, multiple podcasts on our website. So here's my students who invited me to their weddings, husbands who bring in their wives, fathers who bring in their children, children who bring in their fathers. This is what makes me so proud, because every single one of these traders, Sam, who put his daughter through Harvard, think and trades as hedge fund manager does. There is no other way to trade. Alpha Fibonacci trading system is a complete semi-automated system with multi-market scanner and proprietary Alpha Fibonacci software. It uses only pure price, no indicators of any kind. Keyword, proprietary Fibonacci for targets only. Here's S&P this morning. This reversal zone been identified many days in advance. Intelligent trader who is trading micro S&P, macro S&P, or any size never enters near this level. This was ultimate point of entry. With Alpha Fibonacci system, you know this hours, days in advance, as you will see on multiple instruments. And if I convert this chart to 5 minutes, this is the events in the last few hours. With Alpha Fibonacci system, you know this hours, days in advance. Shock or not, here's Amazon. Identical structure. So if day trading not your cup of tea, use everything for long-term investment decisions. With Alpha Fibonacci system, you buying at the bottom, you buying at support. Now, Amazon is a major mess for the last 6 months. Identified since 2019. This is bearish correction, lasting weeks and months, but strategy remains identical on long-term stocks or day trading, anything you choose. And if I convert this chart to 15 or any chart you choose to trade, this is the power of the system. Buy at support, but never enter into reversal zone. You are not in front of the screen. You are not buying into. And price been respecting this key support identified hours in advance for the last 3 hours. But if I convert this chart to 3, identical formula remains. And that's the reason system traded on any size accounts. Pure price for entry and Fibonacci for exits. This is strategic, precise, institutional trend system that removes speculation and allows trader to trade markets as alpha Fibonacci chess across all instruments. Because price action remains the same, the only difference, risk management and trade hold time. On day trading, you're holding trade few minutes. On position trading, you're holding trade days, weeks, and months. And if you want to trade both, it's not a problem. Of course, traders do so all over the world, on all instruments, all accounts. And that's key to components. You will never need anything else. Goldman Sachs trader whom I mentor, JP Morgan trader whom I mentor, never ever chases indicators. So why should you? I coach you, I mentor you how to think and trade as JP Morgan Trader does. Pure price is what you need. Not wasting time on chasing indicators, not speculating, not gambling, but focusing on what matters. Price for entry and Fibonacci for exits. Nothing else is needed ever on all instruments. So here's Carlton, whose podcast you can hear on my website. Carlton tried for about 20 years. After a couple of sessions with me in private mentoring, he's trading for a hedge fund. I mentored Carlton, exact same system I mentored to JP Morgan Trader. Identical. And that's what means the world. So listen to podcasts as new podcasts coming every single week. And when Carlton's friends joining us, that's the reason I live and breathe what I do, because they will never need anything else. They think and trade as JP Morgan Trader does. They are not wasting time on indicators. They trading strategically, pure price for entry and Fibonacci for exits. With Alpha Fibonacci trading system, trader can trade any instrument with ultimate precision, from 1, 5, 15-minute S&P and Q Dow futures to Bitcoin, Euro, Pound, Apple, Amazon. Let's take a look on stocks in the last few years and what played out with Alpha Fibonacci system, shall we? Apple, 2016. Comes out with the worst earnings. Apple at 93. I present at Hedge Fund Convention. What do I say? It's posted on LinkedIn. It's all over social media. I say the only thing that matters if price will obey this support or not. And if price will obey this support, then this is critical start of the bullish rally. Despite worst earnings in 13 years, Apple doubles in value. Trading on the news will never work. Trading using Alpha Fibonacci system does. And if you're trading weekly chart, you're spending maximum 30 minutes per week in front of the screen. That's all you will ever need. But you also know many months in advance where Apple heading to next. Apple reaches next level. And when Apple reaches reversal zone, there is no surprise, Apple selling off. But what do you see at the bottom? Bullish trend inception, 140 level. And when that level is reached, that's a place to buy with Alpha Fibonacci system. There is no surprise. And when reversal is reached again, Apple selling off again. There is no surprise, all precise. This is what's playing out right now on S&P traders. Do you remember what I identified when we started this webinar? This support, correct? Here we are, 15 minutes later. Is anyone surprised this support respected? Of course not. That's the power of the system. I will take this chart to 1 minute and we will continue going back to this chart so you can understand how powerful this is. All in advance, never after the fact. In day trading, minutes in advance, hours, days in advance. In position trading, months, weeks, and years in advance. Here's Apple now. Apple crashed and split from reversal zone. Right now, Apple in major correction. Strategic Alpha Fibonacci trader knows what to do with Apple. That's the power of the system. Ultimate buy point at bullish trend inception. That's it. Choice is yours. What you decide to trade. Is it S&P and Apple and Bitcoin long term? Of course you can. And that remains the key, and that remains the core of the system. So here are critical steps. How to trade as a hedge fund manager. Trading without indicators. Stop wasting time on indicators, pretty please. There is no magic bullet. Magic bullet lies in you. Pure price is all you need. So please, think as Goldman Trader does. Do not waste your time on nonsense. Pay attention to what indicators developed after. Pay attention to what I bring up to you at the start of the webinar. Key buy point. Correct? So let's take a look on S&P in the last 2 years without indicators, with proprietary alpha Fibonacci system. Here's S&P, your spectacular long-term investment chart that you're spending less than 30 minutes per month to invest with alpha Fibonacci system. Identical level, except it's a monthly chart, 18,000 level. You know, many months in advance where reversal will play out. Post-election 4 years ago, bullish rally is on. 1800 level is bullish trend inception on weekly. Price pulling back prior to election and identifies next level. Bullish rally in a progress. You are not a gambler, you are a strategic trader. You're taking profits off the table consistently, and you understand many months in advance what will play out at reversal zone. And when price selling off 2018, you're not losing your mind. You're not wasting your time on nonsense. You understand that as critical 2300 was to the upside, 2300 is ultimate buy point to the downside. That's where buyers stepped in from. Post correction 2019. But hold on 1 second. This is exactly what's happening right now in front of you on day trading chart. Look at that. Doesn't matter what you trade. System applies to it all. Here is S&P in the last year. Bullish rally in progress 2019. Many months in advance, you know where reversal zone will be. Price selling off 2020. Has it been stressful for you, this crisis? I hope not. I hope you thought a top 1% does. I hope you took advantage of institutional buy zone. March 23rd, worse news. What is the problem? It is ultimate institutional buy point. Goldman, JP Morgan traders taking position. Shock or not? Top 1% owns the news. Top 1% loves crisis. It's opportunity. Buyers step in with vengeance. Bullish rally picking up this steam, but you know many months in advance where reversal zone will be. And when correction plays out, you're not surprised. You understand the power of 2900. You're not surprised. When 2900 is respected, buyers step in again. And this is key moment on S&P right now. This key support. Price continue respecting this level. So this is my gift to you. This is everything on S&P. If this remains intact, institutions holding their longs institutions, not shorting the market. This is a very powerful lesson for you. Crisis is opportunity. Pay attention to price. Turn off the noise. And when you do, you trade as my incredible traders do all over the world. It never gets old, I promise. When Emmanuel brings his beautiful wife to the course, 2 little babies at home, look what she does. Shocker. Is it possible? Of course. This never gets old. She think and trade as JP Morgan trader does. And that's one single story. You see hundreds and thousands of those on the website. When Scott comes to me with 100,000 account, he never imagined the returns he achieved. Doing exactly what you see playing out in front of you right now. It doesn't matter if you invest long term, on stocks, on bitcoins, on options, or you day trade S&P, as price is showing you now. And it doesn't matter if it's 15. No indicators needed ever. This is much, much better. Do you remember this level on Apple? And that's few examples. No stress, no speculation. Ultimate rules, ultimate precision is the power of Alpha Fibonacci system. And that's short on S&P. Pure price, pure stop, pure targets. No indicators, nothing blocking your vision. And that's typical day with my incredible traders, where Andy shares that his 14-year-old son, whom he brought to the course, knows what he's going to do for a living. So if he does, what is stopping you? Every trader different account, every trader different time frame. Ken is trading bitcoins. Scott is trading stocks. Jennifer, you saw email. Every trader different everything. Background instruments, stocks, forex, options, bitcoin. What is in common? Positive, powerful, precise Alpha Fibonacci system with incredible community of traders with different experience. And that's the reason I love what I do. So if Dominic can do it, who knows? He will be a hedge fund trader. He has no doubt. What is stopping you? His father, Andy, is hedge fund manager. He's not day trader. And that's the key. Totally different team than husband and wife. This is father and son. So when you come to the website, you can listen to students' podcasts. New podcast uploaded every single week. You will find a trader just like you who struggled for many, many years. And you would recognize all the answers lies in you and pure price. Because every single one of my chart looks like this. And it doesn't matter if it's Apple. It doesn't matter if it's Forex. Every single indicator on the planet developed after this. This is what you start with. Paying attention to price. This is what this trader's done. Many of them struggling for 20, 30 years. It all ends when these traders come to me and make an effort. And if you would like to see their emails, very few uploaded, but if you would like to see thousands and thousands, I constantly share. You decide what you want to trade. And that's the power of the system. And that's how you trade, as hedge fund trader does. And if you choose to trade Amazon, of course you can. Here's Amazon in the last 2 years. Amazon stock mid-trend between critical support and resistance. You know many months in advance what the reversal zone will be. So when Amazon reaches reversal zone, what is happening? How is it possible? Amazon has such excellent earnings. So why in the world is Amazon crushing $700 per share? That's because it's reversal zone. Amazon and sell-off again 2019, another excellent earning. Amazon selling off again $400 per share. Ultimate place to buy 1340, not 2000. If trading on the news worked, every person on the planet would be Bill Gates. It does not. Trading Alpha Fibonacci system works. If you know where ultimate bottom, ultimate top is, you sleep well at night. And that's another instrument. Identical system. Choice is yours. So when Scott joins us, who is a hedge fund trader, and shares in the room his results, look at this. This is stunning, this is flawless, but this is all on stocks. Ken trading Bitcoin, Preston trading Dow. I've never even heard of any of these instruments, but as Ken says, fibs are magic. Alpha Fibonacci system, key rules obeyed, for entry, stop, and target, take a trade. It is that simple. And that's what Scott has done. Starting course in the May with $4 million account, finishing with $6.5 million. So if you're starting with $4,000 account, imagine what's possible. Andy, Jennifer, Dominic doing exact same thing. Everyone, their own story. But every single person I mentor exact same thing as I mentor to JP Morgan trader. That's it. Using this. Institutional trends and trading ranges are critical. This is the most important chart we discuss and analyze every single day. This is stunning flawless bullish rally during the worst economic and coronavirus crises. Top 1% just became 40% richer. Is anyone seeing crisis on this chart? Tell me. Of course not. Ultimate institutional buy point is here, March 23rd. But you never heard that on the news. Right now, institutions holding positions. And if institutions will continue holding positions, price will become drastically more challenging. Ultimate sniper's mentality is a must. And that remains the core of the system. But in case you missed prior review, let me remind you what this chart looks like 10 months ago. That's it. Remember this? Not anymore. 2200 level. Months later. This is your most important chart. This is a chart Goldman, BlackRock, JP Morgan, Morgan Stanley trading, who are moving millions and billions of dollars. So if you're writing your micro account, you need to ride this wave. If you've done any shorts since March 23rd, you've been trading against Goldman. If you've been paying attention to the news and shorting the market, you've been trading against JP Morgan. They're only longs on this chart. Only. Right now, institutions holding longs. Right now, market very challenging. But the lessons on S&P, on Apple, on Amazon are clear. Turn off the noise. Turn off the panic. Pay attention to pure price for entry and alpha Fibonacci for exit. You will never need anything else. You will write institutional train. You will actually start enjoying trading. And this is what these traders do. Jean joined us, he's trading options. Thousands and thousands of posts every single day. I save this. Hundreds of thousands of posts over the years. Pablo posting his trades in gold. Why is Pablo so important? Pablo is complete beginner trader. When Pablo came to the course, he never pushed button on the computer. If Pablo can do this, anyone can. Every trader, different instrument. Every trader, different account. And that's power of the system and hedge fund trader rules. Pablo had no idea about anything. Right now he's trading for top step trader. You can listen to Pablo's podcast on the website. And this is what he does. Pure price for entry and alpha Fibonacci for exit. Price collapses when it reaches the critical target zone. And that remains constant. Gerald, 37-year veteran trader, just joined us. And as he says, thank you, you make trading a joy. Listen and trade as these traders do, using this. Buying the bottom, selling the top. This is oil in 2016. 2016 oil at ultimate bullish buy point. I work with a student in Saudi Arabia who is investing in majority of the stocks that are all based on oil. So wait until you see what played out on oil this year. 2016, oil at the bottom. Months later, oil reaches the end of the minor trend. This is critical moment. As you saw in S&P before election. 2 years later, bullish rally doubles. Reversal zone is a problem. 77 level next. So when price comes to reversal zone and oil starts selling off, no one should be surprised. Correct? Many years in advance, oil identifies that oil will crash to nothing when 55 is out. Day trading not your cup of tea. Use everything for long-term positions. Sell-off continues in 2020. Oil in free fall. Many months in advance, what do you know? Oil heading to below zero? We've never seen a number like this. Never, ever, ever. It's ultimate buy point, correct? And that's where oil skyrocketed from. There is no surprise. All precise. You want to trade oil? Of course you can. Price action remains the same. That has never, ever, ever changed. Here is oil now. Let me close this. Let me see where oil chart is. So here's oil right now, traders. Stock at the end of the minor trend, correct? Frozen, struggling to break through this level. This is key moment on oil. your ultimate buy point is here. Again, it's a different contract than contract on oil 6 months ago. Numbers slightly changed due to the contract. But this is identical system. As you saw on Apple, on Amazon, on S&P, you decide what you want to trade. Using this critical third step, every day trading range will change. If you're a day trader, market conditions change constantly. Every single day you must adjust. This is some of the most difficult market conditions right now. For one simple reason, institutions holding longs. So as long as this continue and hedge fund trader hardly working because the profits are astronomical, day trader has very few opportunities. This is what you must understand and respect. And when opportunity plays out, you must take advantage of that. In the last few days, this was the best. And if I convert this buy point at this critical support to any chart you choose to trade, here it is. Better than this. Institutions continue adding to their longs. And if I again change this chart to 5, identical buy, as you saw on Apple. But that's what played out on Apple 2015-16. This is what been playing out on S&P the last few days. You're never, ever, ever buying near this level. You understand the power of the system. You manage your trade accordingly to trading range. And if you trade in gold, you're using identical rules. This is day trading chart on gold. Your price for entry and Fibonacci for exit. But as hedge fund manager this morning in the class for sharing, ultimate buy point on gold was at bullish trend inception. This is your day trading trade. This is your long-term position. Buy at the bottom at support. Oil frozen. Sell off from reversal zone. There is no surprise. All precise. And that's the power of the system. And that's gold months ago, before. Would you sleep better at night if you know where reversal zone is? Would you stop losing money? There is no surprise. This is gold now, today, 6 months later. That's it. That's the power of the system, traders. What played out on S&P, what played out on Apple, on Amazon, is what playing out on gold, on oil. Every day, trading range will change. As a day trader, you must understand that. And this is how my incredible traders, who are my friends for life, preparing and taking advantage of that. And if you're trading Forex, of course, this is pound. This is long-term position on pound. When pound crashes through this support, what do you see at the bottom? 11,000 level. So how is it possible that there is no good news in Britain? Brexit setting up, country shutting down. So why in the world is pound rising? Because it's a you need to listen to noise. You need to pay attention to price. And if you do, the skies are the limit. This is pound now. There is no bad news. Pure price for entry and Fibonacci for exit. Victor, hedge fund manager who trades Forex, uses Alpha Fibonacci system long term. That's it. This is what I would like to share with you today. And if you do, and you obey these key rules, and you have multi-market scanner for Ninja, if you choose, your trading will become pure joy. Signal comes off, institutional bias check, trading range check, enjoy the trade. Joy community of incredible traders. I love what I do, and if you join us, it's one of the smartest things you have ever done in your life, because if you make an effort, the skies are the limit. So when you come to the website, let me guide you where you will find the answers. As again, you can listen and hear what students share, what students do, and remember, you can trade anything you choose. Software is not a requirement. Software been developed 2019 for retail traders. Software appropriate for Ninja 8, but system can be traded on Thinkorswim, Interactive Brokers, MT4, MT5, TradeView, TradeStation, platforms I've never heard of. As long as it has Fibonacci retracements, and as long as it has pure price, that's all you ever need. So please listen to podcasts. View the videos traders make about their journey. Brad struggling for 20 years prior, Ken killing it during lockdown, Scott's journey, and choose from 4 packages. Group course 3 months. Videos available, hundreds of videos 24/7. We have students in Asia, Middle East, in London, in Europe who are viewing videos and modules. But if you decide to dive into private mentoring, which I do have very few spaces left, and only if you are very flexible, I teach you multi-million-dollar trade. I teach you how to think and trade. As I mentor JP Morgan trader, I hold your hand. And you have access to all group classes. Very few software licenses left. And if you would like to hear from students, listen to podcasts, view the performance, see emails and texts I receive every day. Because if these traders can do it, so can you. It never gets old. I promise you that. And that's the power of the system. You can be one of the traders that's sending me an email. All you have to do, make an effort. And when you do, the skies are the limit. Any questions for me, simply pick up the phone and call me. I'd love to speak with you because I love what I do. 925-257-4298 or info@fibinstitute.com. Also, when for the first time you come to the website, you will see a pop-up. You will see trading room invitation. Sign up, come to the live trading room after Thanksgiving, because next week we are closed, and you will see what's possible. But if you want to sign up without any delays, you will have access to videos and modules instantly. So thank you so much, traders. It's been my joy and pleasure being with you.
Oh,
Have a
thank you so much. There are questions, but we do not have time to take them. So I want everybody who put a question in for Alla, you've got to call her or email her with your questions. She's got her information right on the screen. That was awesome, Alla. Thank you so much for being with us. And we will definitely be in touch to get you back with us again in the future. How about that?
Marvelous, magnificent plan, and thank you so much for having me. Thank you.
Thank you. You have a wonderful day. I appreciate your time.
Thank you so much. Have an amazing holiday and be well, everyone. Thank you, thank you, thank you.
All right, so this is good. We're going to bring in our next speaker, who is Anka Metcalf, and she is with TradeOutLoud.com, and she's going to be talking about generate an income trading futures the first 2 hours at the New York trading session open. That's pretty specific. Anka is a professional futures and equities trader with 20 plus years of trading experience in stocks and futures, who spent over a decade working in investment banking prior to becoming a full-time trader. She's the founder and CEO of TradeOutLoud.com. It's an international trading, education, and service company. She's an expert day trader, swing trader, and active investor with a precise approach to daily income style trading and wealth generation trading, delivering results in any market environment. The strategies she teaches in her courses and her live daily approach to trading provide you with understanding and the tools to take your trading to the next level. She personally manages her own accounts and shares her market knowledge and trades every day with her clients worldwide. She's a contributor to many financial media outlets. Anka, thank you so much for being with us. And I'm going to make you the presenter. You'll have to unmute yourself. And I'll make you the presenter.
Hey, Sherry. Thanks so much for having me.
There you
Quick
go.
sound check.
Yes. Can everybody hear Anka? Oh, no, you need to turn yourself up a little bit now. Oh, no, I can't hear you very good at all.
How about now?
There you go. All right.
Okay. All right, perfect. All right, let me just share the screen. I'm just having some issues here with the screen share. Okay, here we go. Okay, here we go.
Just
All
to
right,
remind
let me know
everybody, hold your
if you can
questions
see
to
the
the
screen.
end. Okay, there you go. Trade out loud. And then if you give us a couple minutes at the end, we'll be able to go over your questions.
All right, sounds fantastic. I'm really looking forward to answering some questions, especially that we're heading now into a very active trading season. But I just want to make sure, double check that you guys can see the screen.
I can see it. It's orange. Trade out loud.
Okay, perfect. Thanks so much. All right, everyone. Thank you so much, first of all, for having me here today. And today I will be talking about generating a six-figure income trading institutional moves. And you do not have to have a very big trading account size or a big trading account size in order to start trading futures. I specialized in day trading, the New York trading session open. Yeah, that's the most volatile part of the day. And I love trading it, and I have specialized in that specific time. I will be detailing on later on why I love that specific time. And this is basically 2 hours and done. So my trading day consists into these 2 hours, extreme focus, no distractions, and that's it. All right, so first of all, I just want to make sure that everybody in here, all the information that we provide is for educational purpose only. For those of you that do not know me, if have not heard any of my presentations before, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I've been doing this for more than 17 years professionally, and prior to this, I come with 10 plus years in investment banking. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, and I'm talking about 8 layers of price support resistance. So if you're only focused on price supply and demand, then you're missing the other 80% of the equation. I focus on specific trigger times. My trading is extremely organized into the beginning of the day. I have precise trigger times in the market. I have specific price zones where I look at levels, and I'm going to share with you some charts today. I'm very focused on chart synchronicity and divergency. And again, today we have some divergency coming into the market where we had a very active Russell today, and we had a sluggish NASDAQ. And I also have a strict set of trading rules and a 10-point scoring system that enables my traders and myself to identify trades with these. We're also proud to be nominated for Outstanding Performance and Best Financial Literacy Tool with Benzinga Global FinTech Awards. For those of you that want to hear more about Trade Out Loud, what we do and what we offer, you can head on to our website. It is tradeoutloud.com. If you guys want to follow us on social media, our handle is Trade Out Loud on Twitter. We have over 9,200 followers. If you guys want to follow me there, I do post a lot of trading ideas for stocks and some levels for the futures market, whether you're day trading or swing trading or even actively investing in the market. This presentation is for traders that really want to achieve above average gains. This is an effort that you put in the market. It's only 2 hours with no distraction for maximum gain. So this is power trading the futures market. In 2020, we have made over $140,000 per contract. And guess what? Trading only basically 4 charts, 4 indices. And of course, we did have some swing trades in oil and natural gas and gold. So one recent in lumber, this is the first time that we traded lumber this year. So guess what? It is stress-free because it is a method, a precise method that allows you to look at the chart, see what the level is, form the setup, form the rotation, wait for it, and initiate the trade. So it's not anything that is out of your reach. The minimum account requirement to duplicate what I do in the trading room because these results are per contract, obviously myself and many of the traders that I have in my trading room trade more than 1 contract. We actually have several hedge fund managers that are in the trading room that are trading their personal accounts, and also they get a lot of ideas for our swing trades. We also have a lot of financial advisors that are in our trading rooms. And just to give you an idea of the caliber, the quality of the trades that I produce. And also we have traders from all walks of life. We have attorneys, we have physicians, we have a lot of traders and nurses, we have waiters and waitresses that have lost their jobs because of the pandemic. And we have a lot of individuals from the tourism industry that lost their job with this pandemic. So if you would like to mimic the process of my trades, and my trading is very simple. I run a trading room that provides the entry, the stop, and the targets, but hey, there's more than that to trading, and you guys know that, right? Because everybody can spit out an entry, everybody can spit out a target, but how do you achieve that target? And what happens when you achieve that target? And what happens if you continue to target too? There's a certain trailing involved, a management involved. So guess what? I do that for you. Okay, so if you guys want to mimic and everything, so if you would have joined us at the beginning of the year in January 2020, January 1st, 2020, this is what your account will look like if you would have had $30,000 or more in your trading account. Obviously, the more you had, you would have increased the amount that you would currently have in your account right now. So all you need in trading is education. So I know a lot of educators sound like a broken record, but you cannot succeed in trading if you don't have the education. You want to have discipline, you want to have patience, and you want to focus. Now, here's a funny post that I have seen on social media. I think it was like a week ago. And this is what it says. Why traders fail. Well, a doctor needs about 7 years of school, training, plus license, and you guys know that. A lawyer needs 4 years of school, plus law school, plus bar exam. A pilot needs at least 3 years of school, plus trading time, plus license. An engineer needs 4 years, plus trading, plus PE exam. So some traders think that, hey, I want to be a trader, I'm opening the account, and I want to start tomorrow, and guess what? I want to be profitable right away. It's not possible. You need to allow yourself to learn how to trade before you actually start making money in the market. And I'm going to let you in on a little secret. When I started trading on the institutional side, I had a mentor that was guiding every step of my way. And believe it or not, he told me that I am going to be a successful trader in 3 years. And I go, that's not possible. It's like I was already about 3 to 6 months into the process, and I was already making substantial. So I was almost at the point of leading the group where I was trading, investing, and I was like, I don't need that. Like, I'm acing it right now. Believe it or not, that after each year completed, I realized that there are different cycles in the year, and there are different stages of trading. For instance, you know, you trade an election year a little bit differently than you trade a post-election year. You trade a year with volatility from pandemics, from financial crisis, differently than you trade any other year. You trade a QE year differently than any other year as well. So you need to go through these cycles into the market in order to have a good structure into your approach when it comes to trading. So I trade from home, and I'm one of the blessed individuals where I trade from home, and I've been doing this for the last 17 years, and I love it. I wouldn't go back to doing anything in the world. And I needed, when I decided to stay home and say, hey, I'm going to put a lid on what I was doing, and I'm going to switch to day trading and swing trading. Guess what? When I got into day trading, it was totally new domain. So I needed to get as much education as I needed, because there were different time frames and with different market structure that I need to look at. It was much more rapid than I was used to, because I was coming from the investing field. So therefore, I needed an income producing style of trading because I needed to pay my bills. And I also wanted to have a portion of my account, or a different account, which I totally suggest everybody does, separate account for swing trading and long-term trading. And I needed to generate that income. Well, this is my income producing style of trading. So after many, many classes that I took, I developed a unique method that definitely at the core, it has technical analysis I'm going to show you, but I developed some proprietary elements that I have learned learned into while I was trading into institutionally, and I have adapted it. And the more I realized, and the more I was committed into the market, and believe me, when I started trading, my working day started at 6:30 in the morning, because I started with day trading stocks. And just 8 years ago, I fully switched to futures, and I'm going to share with you as we're moving along into this webinar why I switched to futures. Well, first of all, it was for simplicity, but later on, I'm going to share with you some really touchy subjects that you're going to have to pay attention to as we're heading into next year, especially after January 20th. So you can definitely generate an income depending on your account size, anywhere from $250 to $5,000 a day. And of course, you can exceed $5,000 a day if you have a larger account size. So you can trade futures for a living to generate an income. So we trade with institutional money flow. What that means is that we're not waiting for let's say a block trade. We're not waiting for some kind of institutional signal. No, we get in with the institutional signal. Why? Because I've been there, I've done that. I know where institutions are starting to leg in, because obviously they don't take on the full position all at the same price, because that would create an imbalance in the market. So they have different layers where they scale into trades. So we know what these levels are because I know where they are. So we also focus on high velocity moves for high rewards. So that means that we're waiting until there's a really good setup in the market before we take it, because we want to make sure that when we get in, we have the institutions that are getting in at the same time. I only trade for 2 hours a day from 9:30 to 11:30, but obviously the research for the market is done before 9:30. So my day starts basically at 8:30, where I collect all my intel before getting live into trades. So I only trade 2 hours and done. It's truly worth doing all the work. And like I said, my focus is the futures indices. And if you go through my portfolio, which is on our website on tradealla.com, you could definitely, I think it's under, we just have a brand new website. So I think it's under the trading room, and that's where you're going to find the results under the trading room. So you will definitely see that most of the trades that we have and we execute are in the futures indices. In fact, more than 90, I would say more than 95% are futures indices. And we watch 4 charts. We watch the Dow, we watch NASDAQ, S&P, and Russell. And we deploy precise strategies at specific times and specific locations. And as you can see here, this is a chart from today. Very interesting, right? So today we had a support level. And by the way, these are not simple support spots. These are levels of confluence. These are institutional levels from which from which the price tries to bounce or reject and continue lower. You also see here that we have a purple line right here, which means that this is a bullish above spot. So institutions were in on this purple above. But what happens if you're in a New York trading session and if you're only trading the 2 hours of the trading day? Well, guess what? If you're not getting a pullback back to this purple line, you're pretty much going to have to handle and try to find a trade on a rotation off of this support spot. And we don't trade off support spot because once you trade off support spot, and if you try to buy right into the bottom right here, this is the last shelf of this last shelf of defense. This is a floor that can be broken at any time. But can it be done? Yes. I really try to stay away from this, especially if I have more than 2 to 3 taps onto the same support spot. And of course, here we have a little washout bar. This was a institutional forced sell, so they can accumulate for this move. Guess what? We took this trade. In fact, in Russell, I'm going to show you in another slide. This was a trade that we took 4 or 5 points, and we have the target right into this dotted line. Do you think it happened by any chance? No, it was an institutional resistance zone. That's why the price got rejected from this point. So would you like, if you're thinking and say, oh, $250 a day, it's not much. If I have a small account, you have to be realistic, because let's say if you have, I don't know, if you have a $10,000 account and if you make $250, okay, that is a big deal, right? That is a big deal. That's 2.5% per day on your trade, trading only 2 hours, and that is in 2 hours. So if you, let's say, have a small account, that's $250 a day, that means $1,250 a week. That translates into $5,000 a week, and that translates into $60,000 a year. So this is what you will, that you can achieve by being consistent into the market. And these are averages. Sometimes you're going to lose in the market, but this is just an average. Sometimes you're going to make $700 in a trade. Sometimes you're going to make $200 in a trade. Sometimes you're going to close a trade at break even. Just go through my portfolio performance and you're going to see that I have losses. I have trades at break even, and I have some mega home runs as well. Trading part-time for full-time profits. This is what I'm all about. I've worked too hard and too much into, and I put so much effort into trading that I wanted to simplify. And this was my whole goal after being in the market for so many years. So after about 15 years of being in the market, I decided that it's time to simplify. So trading is awesome. There's nothing that I would want to do from ever, and I don't see myself retiring from trading, because I absolutely love it. The 2020 market kept us on its toes because it had certain ups and downs. It had a lot of volatility that came back. We haven't had volatility since 2018, and it's definitely a fast and furious theme, volatile market, which requires to be more focused. But guess what? When you're more focused, you perform better. So trading is absolutely fun, and it's a skill that you only learn once and you only improve on, and you add on, you add on, and you add on. And the best thing about it, it's going to last you a lifetime and will deliver what you put into it. If you're determined, if you put in the work, you're going to have the results. Trading is not, and there is no average in trading. So in trading, you either have to be great or you're losing money and you're a loser. So you have to put in that effort to get to being great. So in the futures market, you can trade different things. So you either can trade indices or energies or stocks or metals or grains, currencies. So there's a plethora of markets that you can trade, and these are strong, hefty markets. I'm going to share with you right now what I do in my day trading. And this is what I do as a carbon copy of what I do in my trading room. So this is the screen that I project into the trading room. And when my students just log in, they see the institutional levels. And by the way, we do provide a course where we teach you how to trace these institutional levels, because they change every single day. And in today's trading, we had a focus on the Dow, because the Dow was a little bit stronger as we were heading into the trading session. It was holding the fleecing high low. I call this the fleecing high low because those tails, those bottoming tails and topping tails are on to forced buy or forced sell. Because remember, what algos love to do is they love to punch you in and get you in the trade, and then they force sell it, they stop you out, and then they go back up. But yesterday it was a different story. Yesterday they faked everybody short, and then the market ran higher. So it was totally expected. We noticed that. So these are elements that you're going to be able to read into the market before they happen. And that's the beauty about it, because we are able to plan and forecast what our next steps are going to be into the market. So in this example today, we picked 20 points into the Dow. So this is the entry point where we got in. We actually had targets all the way into the 900, but we trailed out with 20 points. So we're not complacent. We take what we can get from the market. That's $100 per contract. That's not too bad, right? You're trading with 5 contracts, then guess what? You have $500. If you're trading only with 1 contract, then you have $100. And then we had a second trade in Russell. You can see it right here. This is our entry bar, and this was a breakout strategy. And I have a bonus for you guys today. I'm going to teach you exactly the strategy that is producing the most money for me. And this was the breakout year, and this strategy is immensely profitable. So get your notepads ready and your pen, because you're going to learn a strategy that I made it very, very simple for you. All right, so what we had in Russell is we had a breakout, and then we had continuation, and it was all or nothing trade for us. It was like definitely one of those occasions where we did not use any kind of trailing method, but we said we're going to get in 1800 and we're going to see it at 1805 and we're going to be done. Because we're only focused on the 9:30 to let's say maximum of 11:30 or 12 o'clock segment. We also had another trade in oil, which is rare because oil has been very, very choppy. I don't like to trail oil before numbers are coming out, but after numbers came out, the price stabilized. It did this 180 rotation with an inside bar and continued higher. So I saw a pressure point here into the $42.30, the support right here. So we have resistance marked from yesterday's trading session. We noticed that this is a pressure point right here. So this is where we got in. We actually had a target into the 50. The oil trade never achieved the $42.50 target. So we pretty much have to stop and break even at $42.30 because we didn't want to lose on the trade. So we're very diligent. You can see the trades that are here. These are all that are co-live into our trading room, and we teach you how to initiate these trades. So not only that we teach you how to fish, but we actually put the fish on, we actually catch the fish for you. We ask you how you like it. We prepare it for you. We actually plate it for you, and we spoon feed you the fish. So this is a service like you have never seen before, and a trading education firm that you have never experienced before. So trading is a rule-based system. It's about finding high-odds trades that are very compelling that you cannot say no to, and waiting for the setup. If you see crap and chop in the market, don't trade it. If you have to squint to find a setup, that is not a setup that you should be trading, and that's why you're blowing up your account. It's about fine and precise execution. It's about money management skills, and it's about patience. You have patience, you have the money. You don't have the patience, guess what? You're never going to have the money. In trading in general, there's very simple rules. Rule number 1 that I have is capital preservation. Rule number 2 is have the patience, right? Because if you don't have the patience for what? For a setup to develop, you don't have a trade. Traders that play supply and demand, they were blowing up their accounts because oftentimes these institutional levels, what they do is they do the forced sell or they do the forced buy, and then they switch around. They try to punch everybody out of the game before they continue higher. I was talking to you earlier about the advantages. There are a plethora of advantages for trading futures. One of the reasons why I came into the futures and I decided to, it's not by choice, but for financial reasons, I decided to switch to futures, was the fact that definitely the tax, right? So the tax, you want to pay less taxes, because guess what? I don't want to, be a provider for the IRA. I want to be a provider for myself. So basically, my accountant instructed me to look into different avenues of trading because I was paying a lot of taxes. So definitely for capital gains, and especially for those of you that are making money into the market or are just starting, or if you want to make money in the market and learn a strategy, you are going to get there. So bottom line is that you need to look into the futures market. You can Google it, or you can talk to your accountant. You're going to pay less capital gains into the futures, and you have a lot of if you are a professional trader, you're going to have a lot of tax advantages. So look into that in your accountant. So some of the things that I love about the futures market is that it's an income-producing style of trading. It's also a wealth generation style of trading. So you can day trading and swing trading at the same time. You could also hedge, for instance, if you have a portfolio that is full of long positions into the market, you may consider a hedge, let's say, into the mini S&P, right? So that has the weight to balance your portfolio, not only necessarily looking at the VIX. You don't need a scanner because you're only trading a handful of names, and you could scan for them. It only takes probably about 5 minutes to scan through all the futures, through all the market. There's no pump and dump aside from rumors, and of course, depending on your account size, and you have micros and minis available. So that is a great addition that the CME made to the futures world last year in May. One of the best things that I love about the futures market is that it's a 24-hour market. So you could take action and you have hands-on risk. So for instance, if something happens in the overnight trading session and you want to raise your stop or you want to add to your trade, you can do that. In order to open a futures account size, in order to open a futures account, you need less than you would open a stock day trading account. Usually it's required about $25,000 to open a day trading account, and the reality is that you need about 30,000, because if you lose a cent, guess what? Your day trading status is at the door if you have 25K. Where the futures market allows you to open an account with $5,000, and best of all, even if you have a margin requirement of about, let's say, $1,000 or $500, you can still trade futures if you find a commodity or an index, a futures index, and now you have the micros available, you could still trade those as well. There's a huge advantage, and I know many of you guys in here that are not familiar with the futures world. I'm going to show you a quick example. So I'm going to show you exactly by chart the comparison between trading the stock, respectively the ETF, and trading the futures contract. So let's say if a trader wants to day trade the Qs, and the Qs are, let's say, priced at $280. You need about $1,400 in your account to buy 100 shares. And if the price goes up about 50 cents, then you're gonna make about $50, right? Because each cent is $1. But if you want to trade futures, and by the way, because of the pandemic environment, the future margin requirements was raised, and as long as the volatility is gonna last, and I don't think it's gonna go away anytime soon, you're going to require about $17,000. So if the trade goes up, if NASDAQ, let's say, goes up 50 points, then that's $1,000 compared to the index, because each point is $20. And now you're going to say, it's like, oh yeah, but I can lose as much. No, because you're position sizing. So you're allocating the same amount of risk for the trade. So here's an example, a chart example that we did earlier this year, just to show you on the chart. This is a signature pullback rotation that we often trade in the trading room. Is one of the most popular setups that you're going to find in any technical book. The trader was entered at 10 o'clock because at 10 o'clock the market is into a reversal mode. And again, today at 10 o'clock, the market reversed. And of course, if you have been trading the market and day trading the market, you would have noticed that yesterday at 10 o'clock, the market reversed, and that was the bottom for yesterday's trading session. So the trade duration was actually 20 minutes from we got in until we got out. So we applied 100 shares and we made $73. You could see the P&L right here with 100 shares. Now, let me show you NASDAQ. NASDAQ, same signature rotation that we had. One contract, the trade entered at 10 o'clock. They were both entered at the same time, at the same second. The trade duration was 20 minutes. You can see it here with one contract. That's $600. So I'm going to ask you, what does make sense? Does it make sense to make $600 and spend, 20 minutes in front of the market? Or would you rather spend 20 minutes in the market and make $73? I knew it. Okay. So let me show you, this is one of my favorite strategies to trade. This is the breakout strategy. Can you trade outside of the 2 hours? Of course you can. You can see this actual strategy if you're having a chop fest into the session, and if you're having this range bound market into the whole entire session. Definitely this is a really good breakout opportunity. Okay, you can see the shakeout, and especially I don't trade during the doldrum, so I literally step away from the market, and I usually come back into the market after 2 p.m. And try to look and see what's happening. But if you have a range like this, you really want to place an alert. In this particular case, by the way, this trade in this setup was actually initiated and the New York trading into the first 2 hours in the New York trading session. But because the New York trading session was dull and didn't produce any action into the market, we continued with the trade into the PM session. So here is an example of a shakeout. A lot of times institutions do a forced sell, and this only happens in the doldrum period. Not only, but mostly in the doldrum period. And you can see it right here that the trade was initiated with 8 micros. And again, here you can see the results, $500. So that element that I highlighted into the beginning of the session, that you can make anywhere from $250 to $5,000 or even more, depending on your account size, is so doable. Now, let me teach you the breakout strategy. This is my favorite strategy of all. A breakout strategy is when the price action creates 2 highs and 2 lows. So you have to have the patience. Again, patience equals money. You don't have the patience, you're never going to have the money. So once you have the 2 highs and 2 lows that are determined, you could actually assess the trade and definitely look for a long into this trade. Now, there are 3 ways in which you can trade this that I'm going to share with you in just a little, that I'm going to share with you in just a little while. But before we do that, remember that breakout strategies will be traded only in ongoing, very strong trends. There's no such thing as a breakout in a very, into a downtrend. You're going to go against the trend. There's a strategy for that. It's called a short squeeze, et cetera, but the parameters have to be different. So now we're going to go back to ground zero on teaching the breakout strategy. So there are 3 ways in which you can trade the strategy. Number 1, the strategy can be traded at above the whole entire range. This is the breakout spot. Your stop will be below the support level. Any attempt to say, hey, I'm only going to give this trade about $100 or $300 or I don't know, $500, and that would be like somewhere here. That's what 95% of the retail traders do when trading futures. There's something about the futures traders that I don't know I have no idea what's going on in their heads, but they think that if they have a stop, a monetary value, a stop, and say, hey, I'm going to risk this much, or I'm going to risk, I don't know, 5 points, I'm going to risk 3 points and just give it a go. No, you have to respect the pattern. And by respecting the pattern, you need to put the stop below the stop level. If you think that this size of the trade, the entry, the entry level and the stop level is too wide for you, even by position sizing, then it is advisable for you just to skip the trade. So rule number 1. And strategy number 1, you take it above the range, you put the stop below the range. If the stop is too wide, you have an alternative. And this is strategy number 2. You wait for the price to explode higher and you wait for a retest. The retest is likely going to pull back into the prior resistance area. This point becomes minor support. And you're going to notice that if you have red, 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 red into this area, you could even have a little tail below this spot. On the next rotation that happens into the market, that's your entry point. So you're going to see here that this is from your entry to your stop. This red line becomes your stop. This becomes your entry right here. You're going to have way less risk than you would have had on the original breakout. Now, there's the third rule to this, and this is the third strategy. You buy it on support only if it retests twice. Remember, everything in trading has to be repetitive and twice. Remember, for 2 higher highs and 2 higher lows, determine an uptrend, 2 lower lows and 2 lower highs determine a downtrend. And same with the breakout, 2 equal highs and approximate equal highs. You could have a lower high or a peakable high, or a lower low and a peakable a low and a peakable low underneath. Let's say here, it's still the support spot. So if you want to buy it at the support spot, remember, I'm still waiting for a rotation into this point for confirmation. And then you can have, and I always get in with half the size of my trade. So I divide my position size. Let's say if I allocate $500 for $500, let's say for this trade, I go to my chart and say, how many contracts can I get with this kind of stop? And maybe I could get 1 contract or 7 contracts or 5 micros. It all depends on the risk size, and this is what's going to make or break your account. And by the way, if you decide to join our trading room, we are going to provide you with a free video on position sizing. We usually charge for this video, and we're going to start charging for this video. This is only for a limited time, and this video is going to teach you how to position size for this. And you're going to see such a huge difference in your trading, because your trading is not going to fluctuate anymore. Because at one point you're going to risk $1,000, at one point you're going to risk $500, at one point you're going to risk $200. Your results are going to be all over the place, where your risk needs to be the same on each and every single trade. So for the bottoming formation here, you're going to buy the rotation. You're going to put the stop below the low with half the size. And then at the breakout, you're going to have the other half in. The good part about this is that by the time the trade reaches the resistance spot, you already cash money. And what's going on right here? You're actually playing with free money, so you don't invest anything. Here are some examples of the breakouts that have happened. And again, this strategy can be applicable not only in the futures market, but also into the stock market, because I can't step away from the stock market. I have been swing trading for so long. I just absolutely love it. So that's like 27 years now. Okay, or more. Okay. This is a breakout strategy again, and you can see here that the price is rising and rising and rising. When you have a segment like this, you could actually use this the most recent pivot low to use for your stop. You don't have to go all the way down. Here's another breakout strategy, and this is a NASDAQ. This is something that I have traded, and you can see that beautiful breakout pattern, and there's another mini range that is developing within this huge support, huge resistance and support spot, and the price is moving higher, and you can see that sometimes you're not getting the retest, and it's totally worth it to watch it, because you can have another mini range into this spot, and you can take it for the breakout. And also you're also looking, let's say on the 2-minute, look how that price exploded. So we have resistance, resistance, resistance. We got to break above the resistance, and then we had a retest right off the bottom right here. So if you got in here, your stop still needs to be below this prior pivot low, because you can see the chop that has been going on here. And the breakout is coming right here, as you can see at 9:30. This is the 9:30 right here. This is in your trading session, and this is your retest. So if you wanted to wait for the retest, if you don't have a really sustainable strategy to trade off the support spot, and if you want to take it on the retest, you could just wait. Now, the biggest mistake is that a lot of traders are getting in to these levels right here, or these levels here, because they see the green and go like, oh my gosh, it's the fear of missing out. I just got to get in. And then they're taken down. They go like, oh my God, I stopped out. And they actually stopped out foolishly, because this is the time where you should be initiating the trade right here. Double bottom, I mean, there's nothing any more simpler than that. Also, Netflix here, this is an example of a really wide range that we have right now. And actually, Netflix is still basing right now. So it's still into the 280s. It's still trading into this spot right here. All right, so I want to show you some examples right here. This is an example, let's say with 10 micros, guys. This is one full-size contract, $1,400. I'm going to show you natural gas here so you can trade. This is one contract. You don't need to use a lot of size. So all you need to do is learn how to trade properly and learn the rules of the trade. This is another trade that was in the Dow. And this is my recent trade in lumber. Now, this may not be a trade for all traders, but because it had a substantial risk per trade, it had over, I think it was like $3,400 risk for this trade, but look at the results right here, over $13,000, $13,600 was definitely worth it. All right, so have a small account. You can trade micros. You can look into micros. They're a tenth of the size of the full size contract. They're fantastic for swing trading. My sweet spot is from 9:30 to 11 o'clock because of the overlap of the London session and the New York trading session. The reason why I trade the futures market is because it's a hands-on market. It's great to trade, especially within volatility. And by the way, I didn't mention that day trading is incredible in a volatile market environment, because in a volatile market environment, you have no idea whether the price is going to go up or down or where it's going to go. Futures is the way to go, and day trading is definitely on the safe side because you're in and out and you don't have your money that is on the table. I day trade 2 hours of futures, but I prep about a couple hours in advance, so I profit from the most volatile part of the day and trade only high odds trades, 75% and up, and get out fast. We've generated over $140,000 in profits. Going to run down very quickly here to show you some of our results. You can definitely go to our website to see the results. Win ratio in January, 82%, over $6,000 in February, 86%, over $10,000. The month of March, where everybody, you know, I have a lot of friends that are brokers, and most retail traders blew their accounts in March. We generated a win ratio of 91.8%, over $26,000. And by the way, this is per contract. This is not by position sizing. This is like bare per contract. Like if you really want to trade, you would have, let's say, a $30,000 account and you want to carbon copy all my trades. This is what you're going to be, this is what you would have generated. Win ratio in April, 70%, over $16,000. In May, 81%, over almost $10,000. $5,000, 66% in June. July, 82% win ratio. And August, here is August, 86% win ratio. September, 77% win ratio. October was actually 79% win ratio. I didn't have room to put it here. It was a very active month. November is beautiful, shaping up beautiful right now because of the lumber trade, and we had a trade in natural gas as well. That totally helped with our day trading. So we trade with a structured approach. We teach and trade live every single day, a highly successful, very algorithmic method. And we actually trade with the institutional money flow. We don't wait for the institutions. We get in on the institutional wave. Our method overrides any kind of dark pools earnings, any artificial indicator, any kind of news. We teach an institutional grade trading system that is based on offering precise locations of buys and sells. We teach you management, HOTS trading. You could go head onto our website and check out our class. We have an upcoming class, actually. It's the last class of this, this year. It's in December, where we teach you everything that you need to know from A to Z. It's the most comprehensive course we have. You're never going to need another technical analysis book or another book or anything else. This is all that you need. It's the most comprehensive course, the Power Income Futures Day Trading course. It's a 5-day live. It's always live. You're always going to get recordings. You're always going to get free access to myself. The classes are online. You get 30 days access to the trading room. You have a limited retakes. The more times you take the retake, the better it is, because there's always going to be a aha moment. Listen, the more you come into the trading room, the next month and the next month and the next month, even 5 months after you take the course, you're going to say, oh my gosh, this is how it sinks in. It's finally sinking in. And you're going to have aha moments for the next 6 to 7 months. I promise you that. All right, so if you want to skip the course and say, hey, I'm ready, I know what I'm doing, or I just want to follow you blindly, you could step into the futures trading room. The futures trading room, you could carbon copy me. The trading room is open from 9:30 until 12 o'clock. And you can carbon copy me. It's 100% guided. So Thank you so much. I don't think we have time for questions. So if you guys have any questions, you can email us at info@tradeoutloud.com.
info@tradeoutloud.com. I'm putting it into the chat so that everybody can just copy and paste it. And oh, well, you know what? Let's have one question because Eric wants to know, do you close out all trades at 11:30 or continue running profitable trades with a trailing stop? Can you hear me, Anka?
Okay, I can hear you right now. I'm the sound went off. So very bizarre.
Do you close out all trades at 11:30 or continue running profitable trades with a trailing stop?
Oh, thank you so much for the question. No, I do continue when I provide guidance. We do have a private feed where I update the traders, and sometimes we leave the trading room open. Most of the time we are done by 11:30. So if there should be a case to continue the trade, or if there's a swing trade, we constantly provide monitoring in our private feed.
Awesome. Fantastic. Okay, I put your email in there. Everybody give Anka an email if you have more questions. Thank you so much for being with us. That was awesome. I do hope
Thank
that
you so much for having me, and thank you everyone. Have a great holiday next week.
Thank you. You have a great day. Bye-bye now.
Thank you. Bye, everyone.
Bye. All right. And we have our final presenter for the day. I'm going to make myself the presenter. We are posting a recording at tradersexclusive.com/archived_webinars. So you can see this. It should be up later today or in the morning. And our next speaker is Rande Howell of Trader's State of Mind with Keeping a Disciplined Mind When the Pressure is On. So we've had some really good topics today, and I think this will really bring it all together for us. Rande Howell is a performance coach and licensed therapist. His work focuses on using emotions to build an effective mind for the management of uncertainty. Wow. Rande's work is grounded in emotional intelligence, mindfulness, and developing latent potential in traders. He teaches traders how to harness emotions to achieve the performance edge so they can effectively control the mind that is brought into the moment of managing uncertainty rather than attempting to control the outcome. He's based in the United States. He travels, speaks, and trains internationally for the emotional finance community. His publications have appeared in many venues, and he's the author of the book Mindful Trading, Mastering Your Emotions and the Inner Game. And Rande, thank you so much for being here. I appreciate your wife for coming and really following up with me because I don't think any of my emails were getting to you. So I'm going to make you the presenter, and you take it away. You have to unmute yourself.
Oh, I have to unmute myself.
There you go.
Yeah, it says that I'm unmuted, so I'm live now.
You're
Cool.
live now, and I can hear you. I see your
and
screen.
I can see
Mastering
the screen.
Trader Psychology.
Oh, we got
Thank
it.
you.
Thank you, Sherry. Thank you. And can everybody see the screen, and can people hear me? That's the first thing. And meanwhile, thank you very much for being here today. I am looking forward to this. It's something that I love, the emotional intelligence applied to uncertainty, and here we are.
We're getting yeses, and they can see and hear you, and I'll stop.
Good. You know, here goes, is that the great American boxer Mike Tyson once made the statement, everybody has a plan until they get hit in the mouth. Okay? That's exactly what trading is like. What we want to do is we want to start saying, you know something, everybody knows you need to be disciplined. Everybody knows that you need to be able to have a method edge, that you need a psychological edge to make that thing happen. And you go in and you're going to do it. And then you get in the midst of it, in the heat of the action, and the plan blows out. The discipline blows out, and suddenly you start doing really silly things. Now, we're going to be taking a look more at what happens in revenge trading and overtrading and trying to make up for prior losses today. We're going to see the neural biology of it, and we're going to see how you can actually start using the brain very differently, not from what it was built to do by evolution, but by you designing a new brain that has a different set of conditions that it works toward. So first, let's just start the good old days. Do you remember the optimism that you brought to trading? Of course you do. Golly, man, you know, you do these numbers and you start ramping them up and you start going, wow, this is really amazing. And I know that this is really about probability. I got it. And, you know, it just worked really well. And then, you know, things are going good enough. And then all of a sudden, you know, you take a loss. But you still maintain that discipline. You got it. Take another one and another one. And before you know it, there's this urgency that arises within you to make that money back, to get even, to get back to break even. And before you know it, literally your ancestral caveman brain wipes out that really cold, clear, logical thinking that you're supposed to have. And suddenly what you are is a very frightened or angry animal feeling very threatened. And when the dust settles, guess what? There's taken another hit in your trading account. And this goes on forever and ever and ever. And it's kind of like this, this whole thing is this moment between knowledge and instinct, where you have the knowledge. You know, you can go, there are really good trading trainers that teach you the knowledge, that if you could only use that knowledge under pressure, you'd be a very profitable trader. But the problem is you add stress, you add the challenge of uncertainty to the mix, and suddenly, without a really well-trained brain, the instinctual nature of fight-flight takes over. And before you know it, man, it just absolutely hangs you out to dry. And people have this problem for years and years and years, and what they discover that willpower drains, and finally it pops, and before you know it, you're acting reactively. And the truth is that you do not see and then believe. What you do is you believe and then you see. There's an old axiom in neurobiology that says the brain only believes what the eye shows it, but the eye only shows the brain what it wants to see. So your beliefs color the truth. You see a particular truth. You don't see the truth. You see a representation of that truth. And what you're doing is when you trade, you are actually seeing the effectiveness of the beliefs that have you in your trading account's performance. That's what you're doing. And if it's not there, then what happens is, wow, you need to look at the beliefs that you're projecting onto the markets. So the thing is that the thing I want you to get, you do not see and then believe, you believe and then you see. That's a big, big point. And the key is, as it ramps up, you've taken that loss, and then it starts having that urgency to make up for prior losses and to get it back. You literally become a gambler. You no longer have the rational mind that can crunch the numbers, okay? That's when you leave your trade rules behind. That's the moment that you become the gambler. The markets now have the advantage in the people in those markets that know how to work people. So the thing is it's this instinctual emotional response under stress of losing that's being triggered. And your mind, because you don't have the skill sets to be able to say, how do I manage that? It triggers to really primitive stuff. And let me tell you something. You really don't have any control over whether or not you win or lose, but yet our brain is built with the idea that it can control outcome. More about that a little later. So what happens? Whew, the brain that you brought to trading is wired through evolutionary psychology to believe three primary things. I'm not saying they're true. I'm saying these are the primary things. That you can, in fact, control outcome. How many of you have said, I'm going to make some money today, as if you had the power to force the markets to make money? No, you don't have that control over outcome. You also don't have control over being right or wrong. You can do everything right in trading and still be wrong. You're just beating up on the caveman brain this time. You're just absolutely teeing it off because for survival's sake, it had to control its environment. It had to be right because we were really small little creatures compared to the predators around us. And the third thing, we came to predict patterns for future occurrences. How many times have you said, I think that this is where the bottom's going to be, and I'm going to buy right here, and I'm going to be at the exact place, and then the bottom just, it crashes through that, and before you know it, you go, oh my God, what have I done? That's the key, is that the hardest thing for a trader to come to understand is that control is an illusion. You can't control outcome. What you can do, though, is you can control the performance you bring to that moment. So you get busted, and this little graph right here actually is showing you something that's really enormously important. Is when you're under stress. Remember, you can. That's why people are so good at taking a demo account and making money, because there's really no stress. There is a reset button, but in real live trading, where you're risking real capital, that little booger called the amygdala is going to disable the thinking brain, and then you're short-circuited. What you want is what's on the left. You want that higher cognition. You want that cerebral cortex to be in charge, or at least have a say so that you stay disciplined, you know your rules, and you stay within the rules. And by doing that, you have an edge, okay? Rather than becoming a gambler when things get disabled. That's what we're looking at. How do you stop these primitive instinctual urges that take over the brain? That's really what we got to do. And let me show you. This is an illustration, and those are not friendly little dogs like my dog met this today while we were out walking. What happens is those wolves are something like wolves. It's a dangerous situation for these guys. All threat was a biological threat during our ancestors' time like this, and that's what wired in. The thing is you see, wow, I know that this is only a psychological distress when I'm not under stress. That's the whole thing, is that actually recognizing this uncertainty, this randomness is, that I just have to get used to that. I know that I have to get used to losing. That's part of the currency of trading. You just keep those losses small and you use your edge over and over again. But that part of the brain called the emotional brain, the mammalian brain, or what I call caveman brain also, doesn't even see it that way. And under stress, it takes over. And you might say, well, how's it take over? Well, let's actually take a look from a habit standpoint, what it really looks like. You bring in an expectation of making money or winning. You can see that I'm not a big fan of people having a mindset for winning in trading. And then you take a loss, successive losses. It'll happen. And that's called a cue. Okay. Then the brain experiences powerlessness. Oh my gosh. And out of that powerlessness comes confusion and then vulnerability. Danger. And all of a sudden what happens is it triggers an emotional hijacking. That's that fog that goes over. What was I thinking? And out of that, it goes directly to the fight-flight response. That's the amygdala, and that's the sympathetic nervous system. And suddenly it brings a hardwired habit, okay? That's the big deal. There's your pattern. Okay, aggression. And that aggression is the same thing that caveman was doing. He has to be aggressive. He's scared, and he's scared for his family. He's scared for his tribe, and those are some serious predators. And so the aggression shows up, and he's out. He has to do that, or no genes are going to go into the future. And suddenly what happens is you start thinking from aggression or desperation, okay? And all of a sudden you begin to realize, oh my gosh, what Randy just said, it's all thinking, is emotional state dependent. Yes, friends, that's what I'm saying. It's not like you can not have emotions in trading. The moment that there is a change in status in the markets, by definition, if you're participating in that market, you are going to experience emotions. Now, whether or not you know they're there, that's a totally different question. But they're going to be there, and they're going to be hijacking you. And the next thing is that I want you to notice how clever this is. This belief, you have these beliefs, but within the word belief, what you see is the word lie. My promise to you is this: your brain is going to lie to you. It's going to lie to you a lot. It'll lie to you about, if you're scared to get into trade, it's going to lie to you about the potential of, the bad news. It's also going to lie to you about the possibility, I've taken a few losses, I need to get my money back. It's going to start lying to you, and you're actually going to believe that you can make up for prior losses, when in fact, every trade you take is independent of another. And from a statistical standpoint, over time, you see the pattern emerge. But there's no straight line. There is a density of just absolutely random events going on. It's powerful. So you begin to see, oh my gosh, my brain's lying to me. Yeah. And you've been trying to defend it, ignore it. And I'm going to show you exactly what happens. Okay? This graph, what I want you to see is right there on the lower left-hand side, you see emotional stimulus. That's sensorial information coming into the thalamus. And the thalamus is kind of like a traffic cop. He's deciding who is going to go where, when, okay? And based on history, it's going to decide whether or not the sensorial information coming in is dangerous. There's a saber-toothed tiger out there trying to eat me alive. Or if it's not, it's okay that I can send it to the thinking brain and we can have rational thought. That would be the sensory cortex. And that is known as the long high road. It takes a long time. It takes more than 1/4 of a second for the information to hit the thalamus and to be sent to the brain for thinking. 1/4 of a second. Seems like a short time. However, if that traffic cop decides that this is a dangerous situation, there's a saber-toothed tiger over there, it's going to shoot that information straight to the amygdala. That's the kind of the gateway fight-flight response, okay? And that's called the low road. It takes nanoseconds, 0.003 seconds to get that information from the thalamus over the amygdala. And in the amygdala, by this time, the traffic cop has cut off information to your thinking brain. This is what happens under stress. And then you see that hippocampus over there, and what it's doing is it's reverting back to emotional memory of other times, and all of a sudden you start saying, I'm in danger, and you've got the anxiety, and you've got the, oh my God, I have to make up for prior losses, and that's when you lose your cool, okay? That emotional response that comes out is from fight, flight. It's an automatic habit. It's triggered, it's primitive, instinctual, and wipes out the thinking brain. This, my friends, is what you have to overcome. And here, here's a good illustration of after you take a couple of losses, you're sitting there and all of a sudden you get, oh my God. You have a fear, you have a desperation, but you also could have an anger. That money's flying away and you need to get it back. Do you see the traffic cop right there? He's beginning to reroute it. When you see that explanation, that urgency, that's the low road, just like that. This is where mastering your emotions and the beliefs that driving performances becomes absolutely essential. So what we want to do, how do you go about changing this thing? Fundamentally, you have a brain that no matter how successful it's been before trading, you have a brain that is not built for trading. You have a certainty-based brain that has allowed our species to become this incredible successful species on Earth. However, in trading, there is no certainty. And you need to turn a brain that evolved for certainty to make things happen and to win our survival. You have to change it, you have to redesign it into a mind that is comfortable with probability, comfortable with uncertainty. Okay. So you've got it. And I'm going to tell you something, this is not your fault. Blame evolution if you want to. The thing is, though, you survived, and here we are. And if you want to become a trader, you're going to have to understand the mind required for trading is very different than the mind that can produce success in corporate America, in athletics, and in businesses. There is that belief, I can dominate, I can do this, I can make things happen, I'm determined. That doesn't work in trading. you're going to be taking a lot of losses, friends. It's just keeping them small and not losing your cool. So you're looking at it and you're going, wow, how do I do that? Well, it starts with this. Once you grasp that the brain you brought to trading is not going to work for success in trading, it really has to be rebuilt for long-term edge rather than short-term winning and survival. That's just the nature. And out of that, what you do, it's kind of like you start thinking, well, can I win? Can I have a high win percentage? Most likely not. Most of the guys I work with who are quite successful, by the way, they win 40% of the time. When you see someone winning 50% of the time, that's really good. But what they've done is what they recognize is they've accepted losing as part of trading. They actually congratulate themselves when they take a good loss. Okay? They congratulate themselves for taking a good loss. That's what I teach, friends. Because what you're doing is that what you're realizing is that you don't have control over the outcome, but you do have control over whether or not you're going to let that loss just grow and grow and grow and get really big, or whether or not you're going to cut it while it's small and move on. And how do you do that? The very first thing that you got to do is just truly recognize that the brain is just simply doing what it's supposed to do. The emotions are there just doing what they're supposed to do also. Emotions are actually biological action potentials. They're not feelings, okay? And those feelings, what they're doing, when you feel the emotion, what you're doing is you're feeling the chemistry of the emotion pulsing through your brain and your body. And by that time, you are lit up. So controlling that emotion becomes really important, because, and instinctual stuff, you're going to have to make a completely new way of understanding it. It's kind of like when Tony Dungy came to the Colts. What he wanted to do is he didn't want his players thinking. That's the last thing he wanted. What he wanted to do is he wanted them to be playing on instinct. The practice so much, the perfection so much, that it became instinctual. It didn't have to think. It's kind of like, that's not exactly what can happen here, but the main thing is that what we want to do is say, okay, how do we do this? If we know that they're biological action potentials, coordinating action, well, what we have to do is we have to take the old way, the brain that you came from evolution by, and we have to change the way it interacts instinctively with uncertainty. Or what happens, you flip out, you don't get into trades, then you get FOMO and say, I'm missing out, then you push through and you get into dumb, stupid trades, or you can't manage the trade, it starts getting, it used to go to pieces when it starts going against you, or when you finally get to the black, you jump out. Or if you lose, you got to get it back. That's when you know you're out of control, caveman mode. So how do you go working with this? The very first thing that I teach is basically emotional regulation. That is recognizing that the emotion is biological. It's not psychological. It takes over psychology, but it's biological in its nature. And what you're doing is you're recognizing that because it's biological, it will have a signature. Each emotion, and the ones we're looking at are lust, greed, and fear, and anxiety. They will have a specific breathing pattern and muscle tension pattern that's associated with that emotion. And what you have to learn is you have to learn diaphragmatic breathing. Tomorrow, when you trade, I want you to watch yourself. Get a mirror. Better than that, get a video feed since you're watching yourself. Better than that, record yourself. And what you will discover is you will see these micro expressions of emotions going all over your face. You will see your body tense. You will see yourself holding your breath. You will see yourself doing all this stuff. And what you're looking at is emotional arousal. You're not looking at muscle tension. You're not looking at holding your breath. No, you're looking at emotional arousal. That emotion is revving up, getting ready to go. And if you start feeling that emotion, that means it's more than ready. It's in your bloodstream, and it's altering the way you think. The first stop, the first Band-Aid, is that you have to learn to diaphragmatically breathe. It just so happens that anger and fear cannot exist with diaphragmatic or bellows breathing. They require holding the breath. They require breath only in the top third of the lung, and panting. They require that. That cuts off oxygen to the brain when you need it post, but it also starts preparing fight, flight. Those big muscles ready to fight or flee. By the diaphragmatic breathing, what you do is you actually change all that. You disrupt the emotion from growing. Does it change the beliefs? No. But if you cannot manage the intensity of the emotion, you're never going to get to the door of the mind where the beliefs are anyway. But let's say you do that. You have to become mindful. You have to start taking the lens that you've been thinking through and realizing, boy, this lens just isn't working out very well according to my trading account. And that's the only truth meter there is in trading. Okay, is that trading account is telling you whether or not the beliefs that you're bringing to the game are effective at extracting more capital from the markets than you give back. And you need to be able to train that observing self to begin to see all this stuff going on inside the mind, because the mind is a pretty tricky place. It's a lot more complicated than you would imagine. I actually consider the brain to be a community of rival emotional programs that organize to create itself, okay? And the mind is where those emotional programs have been given voice. So when you hear that inner commentary going on in the brain, what you're listening to are particular emotional programs in the brain in different locations in the brain. They're duking it out. They're trying to cooperate. That's what's happening. And you will have, if you start thinking, well, you're crazy if you think I'm going to have a bunch of voices in my head. Look, I'm going to tell you something. You're going to have a lot of different motivations in your head, whether or not you like it or not. The thing is can you come to manage them so that you're putting together the team of the mind that can effectively engage uncertainty with a sense of patience, a sense of calm, a sense of discipline, a sense of impartiality. You're also going to have a voice within the self that can calm fear down. These are all things that you have to do. And it starts with being able to literally, guess what? To be able to see through the lens very differently. So you develop this observer and you start finding this inner commentary going on inside the head. And friends, I can tell you right now, when you hear, get in, get in, get in, get in, you're not listening to your better self. You're listening to a very destructive part of the self, because if you have the urgency to act to get in, you're no longer in your right mind. You're no longer in a patient state of mind. And that's what you have to have for trading. But when you listen to this inner commentary, that's what I call the historical internal dialogue. And it is downright dangerous to leave unobserved, okay? It's also uncomfortable when first acknowledged, because all of a sudden, all the lies that you've been telling yourself, your brain's been telling you about how good you are and how you're going to master this and how you're going to get through this, you're just going to work through it, blah, 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 blah. You're realizing, oh, well, what it's doing is it's draining my trading account and the capital I have for trading. And then what you're going to say is, oh my God, I am locked in these beliefs. They're creating my reality. There is actually a saying in neurobiology is that you have never experienced reality. What you've experienced is the brain, based on its biases and beliefs, creating a virtual representation of the markets out there. Okay, so this observer in what parts of the self, parts of the mind are being formed together to engage the markets. Friends, that's the ticket. And most of us really more have experienced this. The brain is a negative assessment machine, and you'll hear the inner commentary. Everybody hears it. You know, you can ignore it at your own risk, okay? The real key is you'll start discovering, if you tune in, there's all these negative global assessments masquerading as truths and beliefs. And what you discover is you don't have thoughts, friends. They're having you. You don't have beliefs, friends. They're creating your world, okay? You need to examine this stuff, because otherwise what happened is you get caught up in this little bubble, okay? And you'll discover, you know, something as scary as this is, how do I break out of this? You know, it's the only reality I see. That's the problem. It just locks in. Understand, your brain has never seen the outside world. It's there in the dark, and it's getting all these sensorial feeds, and it's creating the world. The world's not out there, friends. It's inside the head. And that's why you're projecting those beliefs. So what we're looking to do is, what we really want to do is we want to take the historical organization of the self, okay? And what we want to do is we want to change it. We want to say, okay, that's what nature gave me. That's what adaptation gave me. And it just so happens there's that dang serpent down there, and it just wants to, it's just waiting for an opportune time to destroy me, and it does it. You'll also see that there's light up there. You'll also see that, there's a lot going on inside me. I need to learn how to reorganize the mind from its original intent, okay, to survive the day, the moment, to the intent of the intentional mind for trading, which is recognizing this is a long-term probability-based field that we're in, and we have to build the discipline, the courage, particularly the self-soothing instead of self-commendation, and the impartiality required to produce the probability-based mind. So that's what has to occur. And after that, what you will discover is this, is that in the same way that fear and anger, okay, are always present as voices in the mind, you will also discover that discipline, courage, self-soothing, and impartiality can actually are part of the emotional soup that you bring because you're human, and you can actually build the trading mind to come forth from those emotional programs rather than the historical ones that have us stymied. It's up to you though. But once you grasp that the mind is a community of emotional programs that have been given voice, you begin to say, oh my gosh, I can't control outcome, but I can control the cage that I've been in terms of the mind that I brought to trading. I can recreate that mind, and I can in fact control the mind that I bring into the moment of performance. Okay? I can control the mind that gets into performance. I can't control winning or losing. That's way past my pay grade. But what I can do is control the mind that performs. And ultimately, I teach both from a memory reconsolidation point where I teach you how to get access to emotional programs on a biological level, but I also do it on a symbolic level. The mind that you need is unnatural based on evolution, okay? But at the same time, within everyone has the kind of courage, okay, that little fella had. You will see that all these guys in this image, they're bringing the thing. The king is bringing the discipline. That woman down there has so much love and compassion that, something? Ultimately, the woman in the top right section kills something that is absolutely a man can't kill, but she's woman. You begin to see that she's a compassionate warrior. You see these elements, and this is from the Lord of the Rings, and you find the impartiality, you find the wisdom, and you start seeing them organized into a mind, and they defeat the enemy within. Friends, that's what we're looking for. That's what we're looking for. That's on a symbolic level, okay? But the key is for you to develop the ability to discern between the self-limiting and the self-enhancing potentials. You've been able to get away with not doing that for most of your life until you got to trading. Trading is just a completely different animal. My father, bless his soul, smoked Camel unfiltered cigarettes for 52 years. And when people would say, you really ought to really think about that, at least you ought to go to a filtered cigarette. And my dad, bright guy that he was, didn't see himself dying right that moment. That's that instinctual brain stuff, okay? However, many years later, he really took its impact. And he was at the doctor's office, and the doctor basically looked at him and says, Mr. Howell, you need to get your affairs in order. Now, Dad got all bent out of shape right then. He was staring death right in the face, but it was way too late. That deception living within him had taken him out a long time ago, and he never woke up except the last moment. Here, what we have is that the trading account and the speed of trading is kind of like instant karma. Man, feedback's just right there, whether or not you like it or not. You can't lie to yourself. It's there. And this is that's the ability And you really truly have to develop the capacity of taking losses. It's just part of trading, man. And it also means the whole notion of winning and losing is thrown out the window, because winning is only landing on the right side of probability relative to you. Losing to the professional trader only is landing on the wrong side of probability relative to him. With an edge, though, he continues trading, he continues work, because he knows that he's there to do that. Now, so what we come down to is what you really truly do control is the mind that you bring to uncertainty, and the beliefs, not the ones you talk about in mouth, but the ones you see in action as you trade and then in your trading account, the beliefs that drive your performances. Okay? That's what has to be worked on. This is really about self-development. It's also about self-mastery. Everything you've put off and were seduced by trading it, you know, oh my God, look at that money that can be made. Well, it'd be a really cool thing to do. What happens is nobody tells you just how difficult it is. You're taking what evolution has given you, and you're realizing, oh my God, evolution has not done me a very good deed here. Is I have to rebuild the brain. Yeah, you do, and you have to build it so that it's comfortable with uncertainty. It's uncomfortable with uncertainty. So the real question I ask of you is, do you want to build a mind that performs effectively under the stress of trading? My view is you can keep feeding the dark wolf that lives within you, the destructive part, and you can keep doing the same dumb things over and over again. Or you begin feeding the white wolf, the one that says, you know something, I can change, I can adapt, readapt myself. I can take the reins of self-development, okay, away from natural selection, and I can design the mind that engages the uncertainty of trading. Friends, that's the name of the game. That's the name of the game. What I want to do first is just thank you for coming. And I'll say I have a couple ideas that you might be interested in. Or from my standpoint is that if you're not ready yet, then obviously engage the markets. Prove to yourself, okay, that you're going to have to redesign the brain. You're going to have to redesign the mind that you bring. We have a couple ways of doing it. And the very first thing that I would love for you to do is to get my free book. I have a free ebook. You can get it down at that bottom line right there at www.traderstatesofmind.com. And I know a lot of times when people first hear me, it's going, whoa, where is this coming from? No, it's coming from neurobiology. And basically, I have a passion for the brain on uncertainty. Perfect fit for working with traders, huh? First of all, get that if you don't know about me, and then go to my YouTube channel. Okay, it's got a couple hundred videos there, and people spend hours and hours and hours watching those videos. But then as you want to kick tires a little more, ultimately get my book, Mindful Trading. But then if you're really looking at it and say, you know something, I understand that I have to adapt my brain. It's not going to do it by itself. It's not going to do it by osmosis. And I am going to adapt my brain so that it's an intentional brain that gives rise to a mind that can engage uncertainty effectively. We have a group course starting in January. Most people, we already have 9 people who signed up simply because people need a month or two to get the breathing, the emotional regulation piece down. It's a lot of rote training. And people who sign up late for the course, what they do is they discover the course hits the road running. I assume that you will already be practicing with the emotional regulation skills before we meet, and we will be on into awakening the observer in mindfulness and then applying that mindfulness, boom, just like that. The individual course is people who really want to have an individual mentor relationship with me, and as they really learn how to train the brain and mind to produce that mind needed for trading. But the major thing is this, is that start, and if you're interested, and if what I'm saying makes sense, get the free ebook, okay? And just start exploring this, because my promise to you, there's a reason that most traders, chunks of them, burn out their capital in 3 years are gone. The brain you brought to trading is not going to work. There's a reason that people know how to trade when pressure's not on, but then they fail miserably when the pressure's on. It's the psychology of trading. So I've got a few minutes. I have, according to me, I have about 5 minutes. Tried to leave enough time in the back to see if there are any questions. So Sherry, if there are any questions, I'll be more than happy to answer what comes up.
I had one person who said they couldn't get to your website, but I said that they should just type in Trader's State of Mind. You don't always have to put in the www anymore. tradersstateofmind.com. And if you wanted to share that link with me for the gift, that would be great. I just pulled up your website. It looks great. Okay, so free ebook is right here in the middle.
Yep.
So I'm going to give them that link right there.
Thank you. That'd be a great idea.
See?
That was so smart that I wish I had thought of that. That's pretty cool.
All right, so I just sent it to the whole audience, so you guys can go and grab that ebook. Now, if you're going to send them an email, though, because everybody knows on these webinars that you get to talk back, you can send them an email with all the links that you need so that they get your offer. And I really appreciate this talk. I mean, it seems to me that the state of mind definitely has a huge bearing on how you not only succeed, but also when you're not, like you said, people who congratulate themselves when they take a good loss. Like, what?
Yeah.
So
well, it's true. You know, the thing is that I'm thinking of a particular trader who trades with considerable size. And what happens is that he fully accepts when he has a 60-40 probability on the line, when he fully accepts that he could win and that he could lose. And the thing is that would he take the trade over again? Yeah. Did he manage him effectively? Yeah. Well, it's a good loss. Okay. He would take the trade again.
When you respond appropriately, absolutely, right? And then you learn from it.
Got to build those habits. Got to build the positive habits for probability management.
All right. Does anybody have any questions? We've got just a couple more minutes before we're going to let Rande go. I just am really blown away by how great our webinar was today. And we got William saying Happy Thanksgiving, Merry Christmas, and Happy New Year to all. Happy New Year and Merry Christmas and Happy Thanksgiving to everyone here too. And all the other holidays that everybody observes.
Yeah. And just to let you know is that I actually am a student of my own work. 7 months ago, I had a heart transplant. Okay?
Oh my.
Which you probably know is a pretty, that's a pretty
extreme.
Pretty extreme, yeah. And all this work from the emotional regulation to the observation to building the mind, I cannot tell you when you're really facing dire situation, it's just by the way, I'm doing great.
Fantastic.
I am doing great. I feel actually better and more sharp than I have. But the thing is that most people find that this work is a lot more than just trading. It's about how to achieve your own personal sense of self-mastery. I see a question here. Yeah. So Rande, do your techniques change depending on the type of trading? Does day trading require different mental strategies than swing trading? The thing is about the difference between swing trading and day trading is that swing trading, it's not so, the time frame is so much more expanded and it's not pressurized, and so it's easier to prepare the mind when you have that additional time. But it's the same thing. It really comes down to the brain on uncertainty. The difference with day trading is the intervals are so short, they're so compressed. It is about the hardest thing in the world you can ever imagine teaching the brain to do, because you have all that short stuff and the results are right there. So it's in the day trading routine, basically what you're learning is that you're learning processes that you are constantly bringing your mind back up, replenishing your mind, and getting it set right to be able to manage the intensity of day trading. It's like I said, day trading is, whew, that's a trip.
Intense. Oh, that's fantastic. Really, really fantastic. I hope everybody will avail themselves of the recording. I thank you, Randy, for joining us, and I hope you'll come back again. And I'm just going to switch over to me for a moment for presentation so I can show the last little bit of that. I really appreciate you being here.
Well, thank you. I appreciate being here. It's been fun.
And we wish you all the best, and you know, I trust that you'll be just building your strength and staying good and healthy and making the most of that new heart.
Oh, I'm having a great time. I really am.
Fantastic. And thanks to Dolores as well. Okay.
Yep. She's the pill monster. Thank you.
She's the organizer. All right. Well, you have a great day. Thank you so much. And folks, this has been a presentation of tradersexclusive.com. Thank you for attending. Thank you for being with us, and thank you for your questions. I hope you'll avail yourself to the offers that have come your way today. And this is your host, Sherry, saying trade well. Bye now.